Hi, my dear Salem students. Good morning, everyone. Hope my voice is audible. Happy morning. Okay. As it was continuously raining, as it was continuously raining from last few days in Chennai, that's why I could not make it, and I'm taking an online live. So sorry for that. I thought of coming, but I could not do it. Okay. Yes. Done. So now, without further delay, we are starting with the GST marathon. So for CA intermediate Jan 25 exams. And in this, I'm taking the classes from That's It book. I have released the latest version of the That's It book, and it is there in my website under the downloads. Even I have shared with the coordinator, CICASA coordinator, and they would have shared with you the link for downloading this That's It PDF. So kindly download that. So because we are going to learn from this itself, it is a summary material, and all the important points, including the amendments, I have included in this summary material. So we will be learning from this itself. Okay. And even wherever required, so we will do some small illustrations just to understand the application of the provisions. Okay. And whatever doubts that you have, you can just post it in the Zoom where you are attending. And if it is YouTube live, I'm not able to see the YouTube live. So, but in the Zoom, you can just post your queries, etc. And I'm going to cover all the chapters. I'm not going to, cover only the selected chapters. All the chapters we will discuss, but the important chapters, little bit more time we will spend, and less important chapters we will be spending lesser time. Okay. Then, and first of all, I will thank CICASA, Salem CICASA, for arranging this, and really happy to interact with you all in this medium. Yes. Okay. So yes, can we start? Fine. So what we will do, first we understand. So this is the That's It book, which you can download from my website, which is there. This is my website, and in the downloads it is there. Suppose if you don't have the link, you can download this. This is for Jan 25 exam, and I have included all the amendments of even September also. So because that these amendments are actually common, so that's what ICA also did. They have released amendments, statutory update. So for the purpose of Jan 25 exam, and these statutory updates that contains the amendments which are all of September 24 also, and few amendments of Jan 25. Not much amendments, only few amendments are there for Jan 25. So don't worry about that. But the level of paper is becoming difficult attempt by attempt. And as you all know that your question number 1 is a 10 marks question. That is like in part section B, first question has 2 parts, A and B. And part A is for 10 marks and part B is for 5 marks. And in that part A, 10 marks, so we will be getting questions from almost all the areas, all the important areas like input tax credit, place of supply, then value of supply, then even time of supply. Covering that, including exemptions, they will be coining one question that is related to computation of net GST payable. And the second part of the question will be either from exemptions and RCM. So based on that, the question will be. So therefore, if you ask me, the very important chapters which you should never skip for exam is exemptions and RCM and input tax credit. That is these 3 chapters. So this liability to pay GST is actually a category topic, and this exemptions in GST is also an A category. And next we have this input tax credit. So this input tax credit is also A category chapter. So then value of supply. So these 4 chapters, if you are learning now, liability to pay tax, exemptions, value of supply, input tax credit, definitely the major marks will be from this itself. But it does not mean only this will be tested. These are the A category topics. And then the next important topics are like place of supply. So this place of supply is something which, like they have added recently, and now every question in question number 1 and 2 also, they are testing on place of supply concepts. So due to that reason, this place of supply, that is a category B topic. And this TDS, TCS, payment process, then time of supply. So these are category B topics, including supply under GST. Okay. These are category B topics, and rest and all are category C topics. Okay. And this category A topics, mostly practical questions. Category B topics, we will be getting case study type questions. And from category C topics, we will get case study type questions also, as well as theory questions also. Okay. And almost all the concepts I have included in this book, and these are the various amendments that is applicable for your Jan 25 exam. Okay, that is September 24, as well as Jan 25 exam. I have included all those amendments, and you can see here we are starting in the same flow. So because maybe as you are doing it for revision purpose, so due to that reason, I'm just doing it in the regular sequence only. So let's start with the basic concepts. Basic concepts, you should know certain points which is important from exam point of view for the purpose of MCQ. So GST is implemented in India with effect from which date? 1/7/2017. And how GST formed? All indirect taxes which were levied in the past got subsumed into GST. So basic like central excise duty, then service tax, then CST. These are all levied by central government in the past that got subsumed into GST, but customs duty not subsumed into GST. All indirect taxes levied by central government in the past, except customs duty, got subsumed into GST. But along with customs duty, there is some additional customs duty called as CVD and SAD, countervailing duty and special additional duty. Even that also got subsumed into GST. Then what about the state indirect taxes? 6 state indirect taxes also got subsumed into GST. That is value added tax, advertisement tax, luxury tax, entertainment tax, lottery and betting tax, purchase tax. The purchase tax also known as octroi. These are the 6 indirect taxes levied by state government in the past, got subsumed, but other indirect taxes levied by state government not got subsumed into GST, like professional tax or local body tax or even municipal taxes or some other taxes levied by local authority, not got subsumed into GST. So therefore, entertainment tax and other indirect taxes levied by local authorities not subsumed into GST. So this is how the GST is formed. And India has adopted dual GST model. Dual GST model means what? There will be both central government levy as well as state government levy on the common tax base. Say for example, 100 rupees. 100 rupees, there will be 2.5% GST and 2.5% SGST. So on the common tax base, both central government and state government parallelly levy tax. That is known as dual GST model. So India has dual GST model, and we adopted that model from Brazil and Canada. Then GST Council, we need to know. GST Council, Article 279A of the Constitution. Basically, it is a decision-making body of the GST, and it takes the decisions related to rates of tax, exemptions, etc. Who are the members of GST Council? The members of GST Council, total 33 members will be there, and quorum will be 50%. So 50% means like out of 33, 50%, 17.5 will be the quorum. And central government vote will be 1/3 and state government vote will be 2/3. And in order to take any decision, there is a weighted majority is required. That is 3/4 of weighted majority that is required. And basically, state finance ministers and union finance minister and union MP in charge of revenue for union territories will also be its members. So then next 3/4 majority is required. 3/4 weighted majority is required. So these are all the key points which could be tested in MCQs. Then the types of GSTs that we have: CGST, Central Goods and Services Tax levied by central government; SGST, State Goods and Services Tax levied by state government; UTGST, Union Territory Goods and Services Tax levied by central government only, not Union Territory; then IGST, Integrated Goods and Services Tax levied on interstate supply by central government; then GST compensation cess. When GST compensation cess will come? GST compensation cess is levied by the central government on both intrastate as well as interstate to compensate the states on account of loss arising to the states due to implementation of GST. So GST compensation cess will not be levied on all goods, only on the notified goods. So only in question if it is given GST compensation cess we need to take, otherwise we should not take. And basically it is to compensate the states on account of implementation of GST, and it is extended up to 31st March 2026. Then IGST, which is levied by central government, fully will not be retained by central government. 50% will be given to the consuming state based on place of supply. For example, location of supplier is Tamil Nadu and the place of supply is Karnataka. Then in that case, the IGST which is collected, so in that So 50% will go to Karnataka, consuming state based on place of supply. IGST levied by central government and 50% of that is transferred to the state based on place of supply. If place of supply cannot be ascertained, then what they will do? They will apportion between all the states based on the turnover of the supplier during the financial year. For example, so we are making some interstate, deemed interstate supplies. Actually, it is the same state. Example, supply to SEZ is a deemed interstate supply. I am located in Tamil Nadu. SEZ is also in Tamil Nadu. It's a deemed interstate supply. So deemed interstate supply means IGST will be applicable. But here the place of supply is Tamil Nadu only. Then in that case, what they will do, as IGST is paid and we don't know what is the place of supply, that will be apportioned between all the states of the supplier. So supplier during the previous year would have made turnover to different states. In that ratio, it will be apportioned. That is this. If POS cannot be ascertained, it shall be apportioned between the states based on the turnover of the supplier during the financial year. Then the supply of goods or services is the taxable event under GST. Taxable event means an event on happening of which we need to pay GST is known as taxable event. So that particular taxable event is supply. This supply is divided into two, interstate supply and intrastate supply. Intra means what? If location of supplier and place of supply is in the same state or same union territory, it is intra. If location of supplier and place of supply is in two different states, two different union territories, or a state and a union territory, then it will be interstate supply. And we know that Jammu and Kashmir is not a state now. Jammu and Kashmir will be coming under union territory. The Jammu and Kashmir is divided into two union territories, Union Territory of Jammu and Kashmir and Union Territory of Ladakh. So whenever the supply takes place between Jammu and Kashmir and Ladakh, that is Union Territory of Jammu and Kashmir and Union Territory of Ladakh, it's an interstate supply. It's not intrastate supply. So it is divided into two union territories. And what are the 5 union territories which are called as union territories without state legislature? Ladakh, as we already seen, and then Chandigarh, then Andaman and Nicobar, Lakshadweep, Daman, Diu, Dadra, Nagar Haveli. For these 5 union territories, the type of GST will be UT GST. Only one UT GST Act will be applicable. So this Dadra, Nagar Haveli, Daman and Diu are now merged into a single union territory. Then we have GST network. GST network is an entity which is providing the information technology architecture or infrastructure for implementation of GST. It is a coordinating point between central government, state government, taxpayers, and other stakeholders involved in GST. Okay. So it provides information technology infrastructure for the implementation of GST. And basically it is referred to as common portal. What are the functions that will be done by GST network? Suppose if you want to do the registration, that will be through GST network. If you want to pay the taxes, that is through GST network. If you want to file the returns, that is through GST network. If you want to make application for refund, that is also through this network. That is payment registration, payment of tax, furnishing of returns, settlement of IGST. Settlement of IGST means, so IGST which is collected by central government will not be fully retained by central government. So in that 50% will be given to the consuming state. So that settlement between the central government and state government is also done by the GST network. And e-way bill, that is for generation of e-way bill, e-invoice, etc. we have. And this GST network is a 100% government owned entity. So keep that in mind. It is not a private entity. It is a 100% government owned entity. It will come under government entity, not government. It will come under government entity. Okay. Then next one, we have supply. So these are the basic concepts that we have. Then proceeding to supply. Supply here. So I already told you, whenever there is a taxable event, on one event, we need to pay GST. So what is a taxable event under GST? Supply of goods or service or both. So the levy of GST is based on the taxable event under GST, that is supply of goods or services or both. This supply, we have total 4. 7 subsection 1 includes, 7 subsection 2 excludes. So supply includes, 7 subsection 1 excludes, and then classification of supply into goods or services. Here, please try to remember the subsections also. So subsection 1 includes, subsection 2 excludes, subsection 1A classification of supply into goods or services. This subsection 1A, whenever you are referring to, we have to also write read with schedule 2. There are 3 schedules in CGST Act, that also you remember, because being in intermediate level supply chapter, definitely you need to write all these things so that the valuer gets impressed. So schedule 1 is about 7.1c. There are some activities even though without consideration constitute supply. So there you need to write section 7.1c read with schedule 1. Then schedule 2 talks about activities which are classified into goods or services. So whenever you're writing that, you need to write as per section 7 subsection 1 capital A read with schedule 2. And then when you're writing about exclusion from supply, you need to write section 7 subsection 2 read with schedule 3. These are the 3 schedules. Okay, so 7.1 includes 7.1a classification of suppliers goods or services read with schedule 2, and supply excludes read with schedule 3. And 7 subsection 3 is not applicable at present. That is, central government is empowered to reclassify supply of goods as supply of services and vice versa. That is, first we have classified a transaction as goods. Government is having power to reclassify it as services and vice versa. But they have not yet given any notification in this regard. So these 3 things only there. Now we are looking into supply includes. Supply includes what? 7.1a, any activity for consideration in the course or furtherance of business. First, there should be an activity that should be for a consideration, that should be in the course or furtherance of business. Then 7.1aa, 7.1aa is also any activity for consideration, but basically the difference between 7.1a and 7.1aa is that 7.1a is between any person to any person, but 7.1aa is between a person other than individual. Person other than individual means HUF, firm, AOP, BOI, company, etc., and its members. So for between firm and partners, if there is any activity, 7.1aa will come. Between company and shareholders, if there is any activity, 7.1aa will come. If there is any association and its members, between them, if there is any activity, 7.1aa will come. So activity between a person other than individual. Person other than individual is the phrase, okay, and its members. So its members for a consideration. Then 7.1b talks about import of services. Only one activity, import of services. Why import of goods is not given? Because import of goods is subject matter under customs. So, and customs is not subsumed into GST. That's why import of goods is not there. We have only import of services. But that import of services should be for a consideration, and whether or not in the course or furtherance of businesses. I'm importing the services for my personal purpose, of course, for a consideration. Example, Amazon, Netflix, etc. I'm importing, I pay some charges. It is not for the business purpose, but for my personal purpose. Even then, it will become supply under 7.1b. Then 7.1c, always we need to write 7.1c read with schedule 1. So what are the activities? 4 activities. DRIP. D for disposal of business asset on which ITC is availed. So I have purchased some business asset on which ITC is availed, and that business asset I am disposing it of. It may be disposed of in the course or furtherance of business or not in the course or furtherance of business. I may donate it to an orphanage, or I may give it to my employee. So if I give it to my employee, it is in the course or furtherance of business. If I donate to an orphanage, it is not in the course or furtherance of business. But the disposal of business asset on which ITC is availed, if there, definitely it is supply under 7.1c. Then next, R for related party transaction, including transaction between distinct persons. Suppose between related parties or between distinct persons, if there is any activity of goods or services without consideration, definitely it will become supply. Then import of service from a related person or another establishment located outside India. The 7.1b is normal import of service, but 7.1c is import of service from a related person or another establishment. Another establishment means head office or branch office located outside India. And it should be in the course or furtherance of business, but it is without consideration. All these are without consideration. Only when there is no consideration, no C, we need to refer to 7.1c. Okay. And then last, principal agent transaction. Very, very important point. Principal agent transaction is only with respect to goods, not with respect to services. So if there is any activity between principal and the agent, and definitely it is in the context of goods only, it will become supply, not in the context of services. And one more important condition is that the agent should be acting on behalf of principal. When agent will be acting on behalf of principal, if the agent, for example, there is a principal, I am the agent. If I act on behalf of principal, means I am raising the invoice in my name, so then I am acting on behalf of my principal. Now between my principal and me, that will be supply under 7.1c. Suppose if I am not acting on behalf of principal, means what? My principal is only raising the invoice to you, so which means I am mere agent, not acting on behalf of principal. If there is any activity between my principal and me, that will not be coming under 7.1c. Again, remember, whenever the invoice is raised by the agent in his name, then only agent is acting on behalf of principal. Then only it will become supply under 7.1c between principal and the agent. Then next, we have to see first 7 subsection 2. Whenever in exam you are seeing the activity, because every question there will be some kind of activity when it comes to GST question paper. So every activity you need to first check Is it in 7 subsection 2 exclusions? If it is in 7 subsection 2 exclusions, then the activity is not a supply. If it is not in 7 subsection 2, then check it may come under 7 subsection 1, any clause. If it is not coming in 7 subsection 1 also, then the activity is not a supply. Again, I am repeating. If the activity is not covered in 7 subsection 2, then we need to refer 7 subsection 1. And if the activity is not in 7 subsection 1 also, then the activity is not a supply. What if the activity is in 7 subsection 2 exclusions? Not a supply. You need to write the said activity is covered under 7 subsection 2, which is not a supply. Consequently, GST not payable. Suppose if it is not in 7 subsection 2, you need to write the said activity is not covered in 7 subsection 2. However, it may be covered under 7 subsection 1, but in the present case, it is not covered under 7 subsection 1 also. Consequently, it is not a supply and GST not payable. Like that, you need to give the justification. Proper justification is a must in the answer sheet. Otherwise, don't expect marks. So only when you are writing the justification, you will get marks. Then next, this section 2 talks about the definitions. So these are the various important definitions that you should be knowing. So meaning of goods, meaning of services, meaning of business, meaning of consideration, and the meaning of person, which we will be discussing now. So 7 subsection 2 talks about exclusions from supply. So whenever you are writing 7 subsection 2, read with schedule 3 that you should write. And what are the list of activities which are excluded from supply? Spanned slow. Yes, for sovereign functions of government. So this is an amendment. So sovereign functions of government means only 2 activities which are covered as excluded. So what we have learned previously, is that all activities of government other than Department of Post, transportation of goods or passengers, airport or port services, and services to business entities. But that is not applicable now. So what we need to see as excluded from supply. Only 2 activities are excluded from supply under sovereign functions. That is activities of municipalities and panchayat under Article 243G or 243W of the Constitution is excluded from supply. That is only called as sovereign functions. Like municipality or gram panchayat, as per the Constitution, is required to do something, and they are doing that, for which they are collecting some charges. So many municipalities will be doing the service of cleaning the garbage, etc. And some charges may be collecting, or they may be providing water facility and they may be collecting some charges. All these things will be coming under municipal functions or panchayat functions, for which money collected is excluded from supply. That is only sovereign functions of government. Then P for post. Post, government post, constitutional post, nominated post. Government post means MLAs, MPs. Constitutional post means we have a governor, president, Supreme Court, Chief Justice, etc. Nominated post means there is a board. In that board, government will be appointing one person as a member or a head or a chairman or a director, for which they will be getting some money from the government. That money received is also excluded from supply. That is nominated post. Then A for actionable claims. Actionable claims means any instrument which satisfies 4 conditions. That will be called as an actionable claim. First, you have a right. Right of what? Right to recover debt or receive a benefit. That right is transferable. You can transfer it to any person, and it is legally enforceable. Whomsoever is holding the right, that person is enjoying the benefit, or he will only recover the debt. Bill of exchange is an actionable claim. So, but not all actionable claims are covered under supply. Actionable claims other than specified actionable claims are excluded from supply. Only specified actionable claims are covered under supply. So specified actionable claims. What are those specified actionable claims? HC block. H for horse racing. C for casino. B for betting. L for lottery. O for online money gaming. And G for gambling. So these are the only specified actionable claims which are covered under supply. All other actionable claims are excluded from supply. Remember this keyword, HC block. H for horse racing. C for casinos. B for betting. O for online money gaming. Not online gaming. Online money gaming. There is a difference between online gaming and online money gaming. Online gaming means you pay money to play the game. That is online gaming. That will not be coming under actionable claim. That is coming under online services. That is OIDR services. But when you deposit the money and play the game in order to win the money back, like Rummy Circle, Online Rummy, Dream 11, these are all examples of online money gaming. That will come under specified actionable claims. And then gambling. So these are specified actionable claims which are covered under supply. All others are excluded from supply. And remember one more point related to specified actionable claims. Specified actionable claims are treated as goods, and the rate of GST applicable to specified actionable claims is 28%. So the moment it is specified actionable claims, normal rate 18% will not come. So for all these specified actionable claims, the rate of GST is 28%. The rate is 28%. It is not a normal rate, and moreover, it will always be treated as goods. The next L refers to legal fees, fee collected by court or tribunal. Court or tribunal will be collecting the fees for the purpose of maintaining the documentation, etc. and all. That is also excluded from supply. Then L refers to land sale. Land sale including sale of building. So I am selling the land or I am selling the building. So, but when the building sale will be excluded from supply? Sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. So then only it is excluded from supply. But for land, there is no issue. Always land is excluded from supply. But building is excluded from supply only if entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then E for employee to employer in the course of employment. I am an employee providing service to the employer and I am getting some salary, that is excluded from supply, but it should be in the course of employment. Then D for death related activities, funeral, burial, crematorium, mortuary, including transportation of deceased, all those are excluded from supply. Then S is sale on high seas. That is, whenever I am importing the goods, when the goods are in transit, I transfer the document of title to some other person and get some money. So that is excluded from supply. Why is it excluded from supply? Because that person is anyhow going to pay customs duty along with IGST. So I am relieved now in the transaction. Again, I'm repeating, goods are in transit. I transfer the document of title to some other person. Anyhow, he will pay customs duty along with IGST. So I'm relieved and my activity or my money is excluded from supply. Same way, we have one more point, W. Warehoused goods under customs. I imported the goods, kept the goods in a warehouse, and thereafter I transferred the documents of title. Now again, other person is going to pay the customs duty with IGST. So I'm relieved from the transaction. So it is excluded from supply. The difference between this S and W is that in case of S, the goods are in transit, but in case of W, the goods are imported and it is in the warehouse. That's the only difference. Next. We have L, liquor license granted by state government. State government will be giving license to sell the liquor for a license fee, that is excluded from supply. Whereas if I get the license, I transfer the license or I rent the license to some other person and get the consideration, that is not excluded from supply. Only state government giving the license for a consideration is excluded from supply. Then O for outside the country movement of goods. So goods originating outside India, terminating outside India, then it is excluded from supply. So even though the financial impact of the transaction may be in India, seller in India, buyer in India, but the seller's branch outside India, buyer's branch outside India, goods are going from seller's branch outside India to buyer's branch outside India is excluded from supply. That is this. Next, gifts. So related to gifts, we need to understand one important point. Employer and employee are treated as related. So any activity between related, even though without consideration, will become supply under 7(1)(c). However, when employer is giving gift to the employee, and if the value of the gift does not exceed 50,000 rupees in a financial year per employee, then it is not a supply. So not exceeding means less than or equals to 50,000 per annum per employee. What if the value of gift exceeds 50,000 per annum per employee? Entirely it will be treated as supply and chargeable to GST. Then next we have two circulars related to exclusions. One is about the sale of land. Generally, sale of land is excluded from supply. What if it is a sale of developed land? Sale of developed land is also excluded from supply. The difference is that in case of sale of land, it is as it is we will sell. But in case of development land or developed land, we will put the plots and we will lay down the roads, pipelines, etc. And then we sell the developed plot. But both cases, it is sale of land only, it is excluded from supply. However, if the builder or developer collect some money towards development of the land, so he will be incurring a lot of money in laying roads, leveling and pipelines, electric lines, etc., for which he may collect some development charges from the buyer of the land. So those development charges will be covered under supply, that is not excluded from supply. Only that much amount collected towards sale of land is excluded from supply. Sale of land after some development such as leveling, laying down drainage lines, electric lines, etc. is also sale of land and excluded from supply. However, service provided for development of land is not excluded from supply and shall attract GST. Then next one is related to the perquisites point. So perquisites, the difference between gift and perquisite is that gift is not mentioned in the offer document, but perquisite is mentioned in the offer document. So whenever employer is giving perquisites to the employee, so don't put it under a gift point. So even though the perquisite value is more than 50,000, it will not come under supply because employee to employer in the course of employment is excluded from supply. Perquisite is part of salary. So salary received by employee not a supply. Same way, perquisite is part of salary. So perquisite received by employee also will not be covered under supply. So perquisite provided by employer to employee in terms of contractual agreement. That is important. Perquisite means definitely it will be mentioned in the contractual agreement entered between them. Will not be subject to GST when the same are provided in terms of the contract or as per the terms of the contract. And here gift is not mentioned in the contract. So that where in exam you need to clearly check whether it is covered under the offer document or not covered under the offer document, and then decide whether it is a perquisite or a gift. Then summary of 7 subsection 1. First we need to see 7.1a. What is the activity? Any activity. Consideration. So consideration, yes, consideration should be there. Codes are furtherance of business, yes. And point of view, from whose point of view? Supplier point of view. What is the coverage? Both goods or services. 7.1a. 7.1a is any activity between a person other than individual and its members. Again, consideration is essential. Codes are furtherance of business essential. Point of view supplier, and the coverage is goods or services. 7.1b, import of services. For consideration, it may or may not be in a course or furtherance of business. And recipient point of view, always import of service we need to see from recipient point of view only. All others will be seen from supplier point of view. And the coverage is only services. Whereas 7.1c read with schedule 1, DRIP, D for disposal of business asset. In all these cases, consideration is not necessary. But in case of disposal of business asset, it may or may not be in the course or furtherance of business. Again, supplier point of view. And here we see only goods, because business asset means goods only. Then R, related party transaction without consideration part, it should be in the course or furtherance of business. Supplier point of view, and the coverage is both goods and services for related party transaction, including transaction between distinct persons. Then again, import of service from related person. Wherever it is import of service, we need to see from recipient point of view. Consideration is not essential, but it should be in the course or furtherance of business, and only service is covered. Principal agent transaction, no consideration in the course or furtherance of business, supplier point of view, but the coverage is only goods. Between principal and agent, without consideration, if there is any services, that will never come under supply, even though the agent is acting on behalf of principal. That is irrelevant. Then important definitions and points. First, we need to see the meaning of goods. Goods is given under section 2 clause 52, and service is given under section 2 clause 1 or 2. So goods means what? Goods means any kind of movable property, which means immobile property will not be coming under goods. And goods includes 2 things. Actionable claims. Already we know what is the meaning of actionable claims. That is an instrument which satisfies 4 conditions. Right to receive benefit or recover it, which is transferable, legally enforceable, and a holder of that right is entitled to receive the benefit or recover the debt. So actionable claims will be included under goods. And even growing crops, grass, trees, etc. attached to it or forming part of land is also treated as goods, provided it is agreed to be severed, cut before delivery or under the contract of supply. So before supply or under a contract of supply, then it will be coming under goods. But as it is, if you are selling, that is sale of plantation, sale of 100 acres of mango farm, that will not be coming under goods, because that is like you are selling the trees as it is attached. But when you undertake to cut it and deliver, then only it will become goods. But goods excludes money and securities. Then service definition also, if you see, service definition also excludes money and securities. So money and securities are neither goods nor services. And service means anything other than goods. And service includes transaction in money for a separate consideration. So generally money is not covered under goods or services. For example, I am giving you 100 rupees, you are giving me repaying 100 rupees. So transaction in money, neither goods nor services. I am giving you 100 rupees and you are giving me 105 rupees. That 5 rupees is my extra consideration. That will become service. So transaction in money for a separate consideration. Then securities are not treated as goods or services, but facilitating or arranging transaction in securities. Example, I am selling shares, you are buying shares, it is not a supply, neither goods nor services. But this transaction of sale and purchase is through an intermediary or a broker. The broker will get the brokerage. That brokerage will be coming under supply of service. That is this facilitating or arranging transaction in securities. Then money definition. Money means what? Either Indian currency or foreign currency on any instrument recognized by RBI. So therefore, cryptocurrencies will not come under money, because cryptocurrency is not recognized by RBI. And old currency will not be coming under money definition, it is excluded. So it does not include old currency which is not in circulation. So which means sale of old coins or sale of cryptocurrency. As old coins is not money, cryptocurrency is not money. So which means will it come under goods? Yes. So sale of old coins and sale of cryptocurrency treated as goods and taxable because it is not covered under money definition. Then actionable claims, we need to divide into two basically. Actionable claims which are covered under money definition. There are some actionable claims like bill of exchange, promissory note, bearer check, which are recognized by RBI. Due to that reason, it may be covered under money definition. Then it is neither goods nor services. But if the other actionable claims, in that other actionable claims also only specified actionable claims, that is this HC block is covered under supply and others are not a supply. Then this definition already we know. Online gaming versus online money gaming. Online gaming means purely, it is about offering a game on the internet or electronic network and includes online money gaming. That is when you spend money to play the game. Then online money gaming means, so wherein you are depositing the money, deposit the money, that is very, very important. And then you play the game, and it may be a game of chance or game of skill or both. So it may be a game of skill or game of chance or both, and you will be earning money out of that. Sometimes you will lose, many times you will lose, and sometimes you will earn. So that will be coming under online money gaming. And online gaming is treated as what? Online gaming treated as OIDR services. Treated as OIDR services, whereas online money gaming is treated as goods. Treated as goods. It is not treated as services. And therefore, there is one important point here. You are importing the online money gaming. That is, there is a betting platform outside India which is providing the services, like which is providing the gaming to you. So when you are importing online money gaming, then it is import of goods. The question has come whether customs duty is payable, because on import of goods, customs duty is payable. Whether customs duty is payable or IGST is payable. So what they are telling, even though actionable claims are goods, but on import of the specified actionable claims, we don't have to pay customs duty. We need to pay only IGST. So that provision is given. The central government has notified that supply of online money gaming as the goods, on import of which integrated tax shall be levied and collected, and not in accordance with the provisions of Customs Tariff Act. So Customs Act will not be applicable even though it is goods. Then meaning of consideration. Consideration means like it includes monetary consideration or non-monetary consideration. Monetary means amount received or receivable. Non-monetary consideration can be in the form of goods or services. And consideration excludes subsidy from central government or state government and refundable security deposit. So this will be excluded from the meaning of consideration. Consideration can be received from recipient or any other person. What we need to see is the presence of consideration, that is only relevant. And consideration should be in respect of or in response to or for the inducement of supply of goods or services or both. And then activity without consideration or consideration without activity is not a supply. So consideration excludes two things, that is refundable security deposits and subsidy from central government or state government. Then donations. Donations is consideration without any activity. So that will not be treated as consideration first of all, because consideration should be in respect of, in response to or for the inducement of supply of goods or services. So donations divided into two: conditional donations, unconditional donations. Conditional donation means you're giving me money, against that I have an obligation to do something to you. That is conditional donation. As I have an obligation to do something to you, whatever money you gave will become my consideration, and that obligation will become my activity. So activity for consideration, it will become supply. For example, you're giving me money and I'm forced to display your name on the top of the building which I am constructing. So which means displaying the name is the activity, and that is obligation, and whatever money you give will be consideration in response to this. So due to that reason, it is a supply in GST. Whereas you're giving me money and you're not putting any obligation on me, means I just got the money, against that I am not having any obligation to do anything to you. So it is not treated as consideration. Consequently, it is not a supply. What if I display your name voluntarily out of the gratitude? So you did not compel me, but I am displaying it out of my gratitude to you. In that case, if only individual name is displayed, still it is unconditional donation and not treated as supply. But if the display of name gives a business advantage to the donor, then there will be some kind of benefit given to the donor. So it will become supply. It is like a conditional donation only. Display of name does not give business advantage to the donor, not a supply. Display of name gives business advantage to the donor, then it is supply under 7(1)(a). Then meaning of person. So person under GST includes both central government and state government. Already we know person under Income Tax Act, that is individual, HUF, AOP, BOI, individual HUF, company, firm, AOP, BY, cooperative society, local authority, artificial juridical person or body corporate. This is the regular meaning of person under Income Tax Act. Same definition even for GST. Only thing extra we have central government and state government. So central government and state government is also required to pay GST on the activities that they are doing. Then meaning of business. Business, we have general meaning and specific activities. General meaning, so there are total 6 activities, mainly trade, commerce, manufacture, profession, occasion, adventure, and then wager. Wager or any other similar activity. So this 7 plus any similar activity. But most of the businesses will come in the first 6 activities: trade, commerce, manufacture, profession, occasion, adventure. But these activities, not only these activities, its incidental or ancillary activities is also covered. For example, there is one person so who is acting, and that particular actor so do brand endorsements also, like he is acting as a brand ambassador also. So that will be coming under incidental or ancillary to his occasion. So occasion is the acting, whereas incidental or ancillary to occasion is brand endorsements. Like that, a chartered accountant or a cost accountant who is practicing his profession, whereas if they take classes and earn money, that will be coming under incidental or ancillary, that is also covered under business. Irrespective of the volume or frequency, whether or not for a pecuniary benefit, whether or not it is for any profit motive, that will be coming under business. That is general meaning of business. Whereas there are some specific activities. These specific activities will always be treated as business. Entry tickets. So any entry tickets, which is for temple entry tickets or cinema theatre entry tickets or park entry tickets, that is business. Holding an office which is accepted in the course or furtherance of trade, commerce, or like a profession, occasion. Example, so I am appointed as an independent director of a company. I am holding the position of independent director, which is in the course or furtherance of my profession. So therefore, that will also be coming under business. Then supply of goods or service in connection with commencement or closure of business. At the time of commencement of business, so I have purchased some ACs and those ACs I am selling. So this is supply of goods in connection with commencement of business. Sale of ACs is not my business, but it is in connection with commencement of business. Same way, at the time when I close down my business, all the furniture and fixtures I will be selling. Sale of furniture and fixtures is not my business, but it is at the time of closure of business. So that is also coming under business activity. Provision of facilities or benefits to its members by a club, association, or society. For example, there is a resident welfare association or apartment owners association. They are incurring the common area maintenance and they will be recovering the maintenance charges. So this is also coming under business activity only. And all activities of race club is also business activity. Even all activities of government is also business activities. So this is the specific meaning of business. So first we need to check the general meaning and then specific meaning. So definitely it will be covered. Almost majority of the transactions will come under business definition unless it is a personal transaction. Then we have meaning of related. So related is not defined under section 2, but it is given under explanation to section 15. And what are the 2 key points related to related definition? So whenever there is an activity without consideration between related parties, it will be treated as supply under 7(1)(c). Moreover, whenever there is transaction between related parties, transaction value not applicable. We have a concept of transaction value. Transaction value under section 15 says that, so price involved in the transaction is taken as a value for payment of GST, but 2 conditions should be satisfied. Supplier and recipient should not be related. Price must be the sole consideration. Supplier and recipient should not be related. So if they are related, transaction value will not be taken. Means we need to determine the value as per rules. Same way, if there is any activity between related parties, even though without consideration, it constitutes supply, because 2 places we have related party transaction, R and I. Related party transaction in import of service from related parties. So related definition we need to know for that purpose. First, total we have 9 points in related definition. The first one is there are 2 companies and the owner of one company is the member, that is holding the position officer or director of the other company. So there are, for example, in my business you are appointed as officer director, and in your business I am appointed as officer or director. Now we both are treated as related. Also, one more point, remember, director of a company and company are also treated as related. Then second point, such persons are legally recognized partners of a firm. So there is a partnership firm, XYZ and company, X and Y are related, Y and Z are related, X and Z are related. Always relationship should be seen between 2 parties, that is supplier and the recipient. Then third, so employer and employee are also treated as related. So these are the 3 points related to First 3 points, such persons or officers or directors of one another's business, they are legally recognized partners of a firm, employer and employee. Then next 3 related to control. That is, there are 2 companies having a shareholder who is common shareholder holding 25% or more in these 2 companies, makes those 2 companies related. So any person directly or indirectly owns, controls or holds 25% or more of the outstanding voting stock or shares of both of them. Then next one person directly or indirectly controls the another. So when I control the another, control means what? Either investment more than 50 or majority common board of directors or controlling the operations. And both of them are directly or indirectly controlled by a third person. That is, there are 2 companies having a common parent company. Then these 2 companies are also treated as related. Then next, 7th point is that together they control a third person. These 2 shareholders of a company hold the major shares of the company. So then those 2 shareholders will be treated as related. Then they are members of the same family. Family means spouse, that is wife, for husband, or for husband, wife, and for wife it is husband. So spouse and children, they are always treated as family, whether or not dependent. Whereas others, that is brothers, sisters, parents, grandparents, will be treated as family only if they are wholly and mainly dependent on that person. Then sole agent. Sole agent means there is only one agent through whom all the supplies are made, and that sole selling agent concept is recognized under the previous Companies Act. So that sole selling agent is also deemed to be related. Then meaning of various supplies. We have taxable supply. Taxable supply means goods or services which is leviable to tax is known as taxable supply. And exempted supply means 3, notified as exempted, nil rated, non-taxable. These 3 will come under exempted supplies. Non-taxable means which is not covered under the levy of GST. What are the 2 non-taxable supplies? Alcoholic liquor for human consumption and 5 petroleum products. In that 5 petroleum products, we have crude oil, petrol, diesel, aviation turbine fuel, and natural gas. Then zero rated supply. Zero rated supply means not that the rate is 0, so the burden will become 0. That is zero rated. That is export of goods or services, supply of goods or services to SEZ. Whenever you are exporting goods or services or supplying goods or services to SEZ, we have to first pay GST and then we will get the refund of that. So as the burden becomes 0, it will be a zero rated supply. Then, so supply of goods or services, if it is chargeable to GST, that is GST payable, it is taxable supply. If it is not chargeable to GST, that is GST not payable, then we need to see, is it leviable to GST or not leviable to GST? Not leviable means non-taxable, then it is exempted. Leviable to GST, nil rated or notified for non-payment, then also it will be exempted. So taxable supplies does not include exempted supplies. Basically, these 3 are exempted: nil rated, notified as exempted, not taxable. So remaining balancing figure will come under taxable supplies. Then next, meaning of aggregate turnover. Aggregate turnover will come across in multiple places in GST. In aggregate turnover, all the 4 supplies will come. Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, everything will come. Taxable, exempted. Exempted includes non-taxable, exports, zero rated, interstate, that includes supplies to SEZ. And these 4, but it should be computed on all India basis against the same permanent account number. And aggregate turnover excludes 2 things: inward supply on which tax is payable by a person under reverse charge, and CGST, SGST, because turnover means outward supply. Inward supply will not come in turnover. Even taxes also will not come in turnover. Then GST on sale of flats and buildings. Whenever entire consideration is received before completion certificate, definitely it is covered under supply, chargeable to GST as works contract service. If entire consideration is received after obtaining completion certificate, then GST not payable because it is excluded from supply, and it is treated as sale of building, immovable property. Whereas part consideration before, part consideration after, it is not excluded from supply. GST payable on entire consideration, payable on entire money, and it is treated as works contract service. CC refers to completion certificate. F4 refers to first occupation. First occupation is the date on which flat is occupied by the buyer in the project. It is deemed as a completion, and remaining flats unbooked, whatever is there, so that will be excluded from supply. Then meaning of distinct person. There are 2 points in distinct person. Point number 1, one registration of a person to another registration is known as distinct person. Or I have a registered establishment in the state and another establishment in another state, even though not registered, that is also my distinct person. For example, I have 2 establishments within the state separately registered, say in Chennai and Salem. So Chennai and Salem, 2 separate registrations, definitely distinct persons. Whereas Chennai and Bengaluru, 2 registrations, definitely distinct persons. Chennai registered establishment, Andhra Pradesh, unregistered establishment. Then also it is distinct person, because when you have an unregistered establishment in the other state, definitely that is also a distinct person. How can there be unregistered establishment? Maybe if you are making only exempted supplies from a particular establishment, you are not required to register that establishment. You are exempted from registration because of that reason. So registered establishment of a person in the state and unregistered establishment of that person in another state will also be treated as distinct persons. Then when a person is required to obtain more than one registration, if they're doing multiple business in different states, separate registration with respect to each state is mandatory. When they're doing multiple business in the same state but in different place of business, separate registration with respect to each place of business, that is optional. Okay, they're doing multiple business, different states, separate registration with respect to each state mandatory. Multiple business, same state but in different place of business, separate registration with respect to each place of business, and that is optional. What if they are doing multiple business, same state, same place of business? They cannot obtain separate registration. Another establishment in another state, whether registered or not, treated as distinct person. Then we have meaning of recipient. Who is the recipient? One who is liable to pay the consideration. So the one who is liable to pay the consideration is the recipient. Suppose if there is a consideration involved. Suppose if consideration is not involved, the one who is receiving the goods or the one who is receiving the services is the recipient. Simple definition. Then once an activity becomes supply. So far what we have seen is when the activity will become supply. Now, once an activity becomes supply, we need to classify that into goods or services. So first we need to check movable property. If there is a transfer of title, that title may be transferred today or may be transferred in future. That will be coming under supply of goods. If there is a transfer of right to use, so then it will be coming under supply of service. For example, I have a car. I'm giving you the title to the car, sale of goods. But I'm giving you the right to use the car. I'm not giving you the title to the car, renting of car, supply of service. Immobile property will never come under goods because immobile property is excluded from supply. Whereas it will come under services when I'm bringing into existence an immobile property like construction, or I'm giving you the right to use immobile property like renting of immobile property, then also it will be coming under service. Then intellectual property rights. So like patent, copyright, trademark, etc. If there is a permanent transfer, it is supply of goods. But if there is a temporary transfer, then it will be coming under supply of services. So permanently, I'm giving you the patent, technology patent to you, sold patent to you. That is supply of goods. But I'm not giving you the patent. For example, I am composing a music and I'm giving you the music for this movie for which you pay some royalty. So that will be coming under supply of service. Then carrying out process on the goods belonging to other person. So you're giving me the substantial material. For example, you give me cloth and I'm doing the stitching. While doing stitching, thread and some material I may use, but substantial material you only give, cloth. So therefore, it will be coming under supply of service. If I only buy the cloth, I only do the stitching, but maybe some buttons or thread you have given, but substantial material belongs to me, so it will come under supply of goods. If the substantial material required for the process is supplied by supplier, it is supply of goods. If the substantial material required for the process is supplied by recipient, then it is supply of services. Then supply of goods along with supply of services means in the activity or in the transaction, there will be both goods and services. Okay. And when there is both goods and services in the same activity, so how we need to treat it? There are three notified activities which will always be treated as supply of services. Works contract service, it includes both goods and services, but it will always be supply of service. Software, always supply of service. Food, always supply of services. So works contract, information technology, and supply of food. Apart from this, other activities we need to treat based on composite supply and mixed supply. If it is a composite supply, check what is the principal supply. If the principal supply is goods, entire activity is goods. If the principal supply is service, entire activity is service. AC and installation, AC goods, installation service. It's a composite supply. AC is goods, so entirely it is treated as goods. Then next, so coaching and study materials. So coaching is services, study material is goods, and the principal supply is coaching, which is service. So entirely it is treated as supply of service. Whereas if it is a mixed supply, see the highest rate. For example, television and warranty. Television is 28%, warranty is 18%. So what is the highest rate? So television. So therefore, we will be taking the highest rate, that is 28%. Whereas that is goods, entirely it is treated as goods. Whereas pen drive 12%, coaching 18%, video lectures. In that case, it is a mixed supply. Highest rate is what? 18%. So that is entirely it is treated as coaching only, like that. Then apart from this, any other activity, so it will come either under doing an act or not doing an act or tolerating an act. Not doing an act means non-compete fees or not doing a particular activity. Tolerating an act means you're tolerating the breach of the other person. So that is also coming under supply of services. But remember, first the activity should become supply, then only we will classify it into supply of goods or services. If the activity is not at all supply, the classification shall not arise. Then, what is the meaning of works contract? Works contract means there is a contract that involves supply of goods as well as supply of services in relation to immovable property. That is very, very important. So, works contract, definitely it will be in relation to immovable property for a single consideration. And job work means carrying out process on the goods belonging to the other person. So, you are giving me goods on which I do the process, then it will be called as job work. And job worker is the supplier and the principal manufacturer is the recipient, and they're telling that the recipient should be registered, another registered person. Basically, job work is supply of services. Then next, composite supply versus mixed supply. Composite supply means there are two or more supplies naturally bundled in the ordinary course of business, one of which is the principal supply. And mixed supply is two or more individual supplies for a single price, which does not constitute composite supply. So what we need to see, first you need to check in both the cases, two or more supplies are there. So see the flow chart. Two or more supplies in a single transaction. No, then section 8 is not applicable. So composite supply, mixed supply is given in section 8. First, to apply section 8, there should be two or more supplies. If there are no two or more supplies, this will not be coming. So two or more supplies in a single transaction, no, section 8 is not applicable. Two or more supplies in a single transaction, then three conditions should be satisfied. All must be taxable, naturally bundled in the ordinary course of business, principal supply identifiable. Naturally bundled means one cannot be supplied without the another. That is naturally bundled. All are taxable, naturally bundled in the ordinary course of business, principal supply. Principal supply means a predominant element in the transaction. That is a main element in the transaction. If these three are satisfied, then it will be a composite supply. You take the rate of principal supply and apply it on the entire transaction. If any one is not satisfied, then you need to check whether it is for a single price. Yes, then it will become mixed supply, and when it is mixed supply, we need to take the highest rate. If it is no, then we need to take it as individual supplies. For example, I am selling inverter plus battery. Inverter plus battery I am selling for 30,000 rupees. Inverter and battery both are taxable, but not naturally bundled, because inverter can be sold separately, battery can be sold separately. So due to that reason, it will not be naturally bundled. It is not coming under composite supply, but it is sold for a single price of 35,000 rupees. So it will come under mixed supply. What if inverter I sold for 20,000, battery I am selling for 15,000? Then in that case, it is neither composite supply nor mixed supply, because it is not for a single price. So it is individual supply, means inverter taxable at the rate applicable to inverter, battery taxable at the rate applicable to battery. Then that is with respect to this. And next, we have three important notes related to this. Point number one, in case of servicing of cars. So car servicing, what will happen? The test of composite supply should not be applied. So there is a circular which says that for cars, don't apply composite supply, and they are telling treat it as separately, goods and services. So it is applicable only for servicing of cars, because in servicing cars, the parts replaced during servicing and the labor charges for replacement are two separate supplies, usually naturally bundled. But as the circular says, you treat as individual supplies, we go by the circular. Test of composite supply should not be applied. Parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. Then number two, food and beverages. So generally food and beverages which are purchased in a theater. So when you go to the theater, you will buy the popcorn, coke, etc. and all. So what is the rate applicable to the popcorn and coke? Because the rate applicable to theater is 28%. So what is the rate applicable to popcorn and coke? 5% only. So 5% only. If you book the theater like ticket, along with that you buy the food also, then also the rate of GST on food will be 5%. When you buy the ticket and as a part of the ticket you get complimentary popcorn and coke, then on the popcorn and coke the rate of GST will be 28%. So food and beverages purchased in a theater taxable as individual supplies, taxable at the rate applicable to a restaurant, that is 5%. And if the same is purchased along with the ticket, then it may attract composite supply. That is what? Ticket and the food is naturally bundled. Then it may become composite supply. In that case, food and beverages is taxable at the rate applicable to entry to cinema hall. Then this already we know, if there are two or more supplies which is neither a composite supply and also not involving single price, then these are treated as individual supplies and taxable accordingly. Then we have some important circulars. The first issue is related to movement of conveyances between distinct persons. So one distinct person to another distinct person, there is a conveyance, there is a lorry which is taking goods or people. Whether GST payable on the lorry? No, GST not payable on the lorry, because the lorry will unload the goods and the lorry will return. So no need to pay GST on the lorry. However, when the lorry is sent for repairs, again whether GST payable? No. So lorry GST not payable, but on the repair work which is done by other distinct person, GST payable. And same way, if there is any movement of spare parts or tools between the distinct person, which is not for further sale, but for consumption in the distinct person, then also it is not a supply. So movement of conveyances carrying goods or passengers or for repairs, not a supply, but the repairing activity will become supply. Also, movement of tools, spares, etc., which is not for further supply, is also treated as not supply and GST not payable. And this circular is given in the context of interstate movement, but the same is applicable for intrastate movement also, because the principle is common in both the cases. When an agent is acting on behalf of principal, if the agent is issuing invoice in his own name, then the agent is acting on behalf of principal or accept invoice in their name. Then in case of print activity, in print activity there are two elements, that is goods element, that is paper and ink, and service element, printing. If paper constitutes principal supply, like tissue papers or postcards or letterheads, etc., then we will be bringing it under supply of goods. But if printing constitutes the principal supply, like books, brochures, flyers, etc., then we will bring it under supply of services. If paper constitutes principal supply, then it is supply of goods. If printing constitutes principal supply, then it is supply of services. In case of bus body building, we need to classify it as goods or services based on what constitutes principal supply. And rethreading of tires, so we will take the tire, we use the rubber and we do the rethreading. Basically, it is supply of services. But if we buy the old tire and sell the rethreaded tire, then it will be coming under supply of goods. Priority sector lending certificates is sold between one bank to another bank whenever they need to meet the targets of priority sector loan. This priority sector lending certificates are treated as goods and it will be chargeable to GST. So one bank which is selling the priority sector lending certificate to another bank, so GST will be applicable on this transaction, and RCM means GST payable by the recipient bank. Then artist who is sending the artwork to the art gallery, he is not required to pay GST at the time when he is sending the artwork to the art gallery, because he will not be getting money, there is no consideration. Only when the art gallery sells the artwork to the buyer, then only they will make the payment to the artist. So due to that reason, only when the artwork gets sold in the art gallery, it is treated as supply in the hands of the artist also. Tenancy rights are pagadi system. Tenancy rights, that is, I have a right to keep the property in my tenancy for a particular lock-in period. So I have taken the property on rent for 3 years and I am in the lock-in period of 3 years, means I have the right to stay in the property. I can transfer it to any other person. I am a tenant 1. I will transfer it to any other person, now for which I will be getting some consideration. So that will be taxable always. Now I may share this tenancy premium with my owner. If it is a residential property, it will be exempted. If it is a commercial property, it will be taxable. So tenancy premium received by the owner of the property. This is for the owner of the property. For others, always taxable. For owner of the property, in relation to residential property, it is exempted. In relation to commercial property, it will be taxable. And no claim bonus. So generally, when we take an insurance policy, first year when we are not claiming anything, second year for the renewal premium, we will get a no claim bonus discount. Whether this no claim bonus is treated as consideration for not making a claim, not like that. We did not claim because the accident did not happen. So not for the sake of this no claim bonus, we did not claim. So due to that reason, that no claim bonus don't have any connection to not making a claim for which we are getting the no claim bonus. So due to that reason, it is not treated as consideration. Then what about the interest received by a del creditor agent? So I am a del creditor agent. I will be making payment to my principal first, and thereafter I will recover money from you along with interest. Now this interest, is it on account of loans, advances, deposits, or on account of delay in receipt of consideration? Interest is covered in 2 branches across GST. One is interest on loans, advances, deposits, which is exempted. Interest on account of delay in receipt of consideration, it will be included in the value and chargeable to GST. Now what we need to see, the interest collected by del creditor agent, is it interest on loans, advances, deposits, or interest on account of delay in receipt of consideration, depends upon who is issuing invoice. If del creditor agent is issuing invoice, then the interest collected by del creditor agent is an account of delay in receipt of consideration. Therefore, it will be taxable. If the invoice is given by the principal, then the interest collected by the del creditor agent is only on account of financing facility. That interest will be exempted. If del creditor agent is raising invoice, then he is a supplier. So the interest collected by del creditor agent If invoice, delegatory agent is raising invoice in the name of the principal, means he is not agent acting on behalf of a principal, he is mere agent. So the interest will be exempted. If delegatory agent is raising invoice in its name, in their name, definitely they are the supplier and it will come under interest on account of delay in receipt of consideration. Then, whether owning a controlling interest in the form of shares by holding company and subsidiary company is supply of service. That is, there is a holding company and subsidiary company. Already holding company holds major shares. Now they are acquiring the remaining shares of the subsidiary company. In this case, whether this activity will be coming under supply. The activity of holding shares of subsidiary company by holding company cannot be treated as supply of service and cannot be taxed under GST. Okay, because securities or shares are neither goods nor services. So with this, we completed segment 2. So yes, guys, are you there? You have any doubts? என்னப்பா புரியுதா? ரொம்ப ஃபாஸ்டா எடுக்கிறேனா? No doubt. Super. See, because இது வந்து marathon. இதை நான் ஃபாஸ்ட்டாக தான் எடுக்கணும். நான் வந்து பொறுமையாக எடுக்க முடியாது. புரிஞ்சுக்கோங்க. ஓகே. So problem is like in 2 days I need to complete everything. Okay, that's why. Maybe இது already YouTubeல இருக்கும் இல்லையா? So again you watch that. சரியா? RTPS. Let me complete this portion first and then RTP also I will discuss. Definitely. Then if you are listening for the first time, சார் இதுதான் சார் நான் ஃபஸ்ட்டு ஜிஎஸ்டி படிக்கிறேன், உங்கள் கிளாஸ் தான் சார் பார்க்குறேன்னா தயவு செஞ்சு பார்க்காதீங்கப்பா. ஸோ விட்டுட்டு போயிடுங்க. யூடியூப்பில் வந்து நான் ஃபுல் லெக்சர் அப்லோட் பண்ணியிருக்கேன், ஒரு 40 hours லெக்சர். அந்த 40 hours லெக்சர் வேணால் பார்த்துக்கோங்க. பார்த்துட்டு அதுக்கப்புறம் வேணால் இது ரிவிஷன் வேணால் பார்த்துக்கோங்க. பிகாஸ் இட்ஸ் கம்ப்ளீட்லி ரிவிஷன். ஃபஸ்ட் டைம் மட்டுமே நான் இது பார்த்து படிச்சுட்டு 2 நாள்லயே நான் பார்த்து முடிச்சிடணும்னா கண்டிப்பா முடியாது. ஓகே, ஸோ ஐ cannot reduce my speed. மேபி when you have doubts, கண்டிப்பா நான் அந்த டவுட்ஸ் ஏதாவது இருந்தால் அதை நான் இன்கார்பரேட் பண்ணி டிஸ்கஸ் பண்றேன். ஆனால் பட் ஸ்லோவா என்னால் சொல்ல முடியாது. Definitely not possible. Try to understand. Thank you. Fine. So we will move on to segment 3, liability to pay GST. In the segment 3, liability to pay GST, we have only one section, that is section 9. Section 9 subsection 1 and 9 subsection 2 says that on 2 products there won't be any GST, that is alcoholic liquor for human consumption and 5 petroleum products. But these 5 petroleum products will come into the ambit of GST as and when decided by the GST Council. But 93, 94, 95, as per 91 and 92, generally liability to pay GST is on supplier. But as per 93, 94, 95, the liability is shifted to some other person. Liability means liability to pay GST to government. On 93, there are some notified goods and services. Liability to pay GST is on the recipient. 94, there is a promoter or builder who is purchasing from an unregistered person. On that promoter or builder is required to pay GST under RCM. Again, recipient only. But 95, there are some notified services where liability to pay GST is on e-commerce operator. Okay. So 93, notified goods and services. We have some list of goods and services. Who will be liable to pay GST? Recipient is liable to pay GST. And here the supplier may or may not be registered. Whereas 94, there is an inward supplies of a registered person from an unregistered person. And in this case, GST payable by promoter or builder. Who will pay GST? Recipient will pay GST. How the supplier should be? Supplier should be unregistered person. Whereas in case of 95, there are some notified services supplied through e-commerce operator. What are those notified services? HATE. H for housekeeping service. A for accommodation service. T for transportation of passengers by any motor vehicle. E for eating food in a restaurant. So these 4 services through e-commerce operator, liability to pay GST is on e-commerce operator. And condition for first 2, H and A, accommodation service and housekeeping service, supplier should be unregistered. But for next 2, T and E, supplier may or may not be registered. So registered or unregistered person. Then we have 93, some notified services under notification 13/2017. So whenever you're writing RCM, you need to write section 9 subsection 3 read with notification 13/2017. So these are the list of services. You need to remember in your mind like this only, like what is the service and what are the exemptions, what are the conditions for RCM, and what is the non-applicability of RCM. Non-applicability of RCM means FCM. Even though this service is listed for RCM, but in that case, FCM will be applicable. So first we will see the list of services. Sir, CG got salads. S for security lending services. I for import of services. R for renting of motor vehicles. Another R for renting of residential property. Sir, C for copyright services. And G for, that is GTA services. Then next, GOT. G for government services. O for overseeing committee services. And T for TDR, FSI and long-term lease. And next, salads. S for sponsorship services. A for agent services. Then L for legal service by individual advocate or firm of advocate. Then another A is for arbitrator services. D for director services. And S for security agency services. These are the list of services which are covered under RCM. So primarily, the moment you see the activity, once you know that it is a supply, then you need to run through your brain as to whether it is covered under Sir CG got salads. If it is covered under Sir CG got salads, no doubt it will be coming under, RCM. But there are some conditions, exemptions, etc. that also we need to check. First, yes, for security lending as per SEBI. Here there is a lender of securities who will be lending securities to a borrower of securities, for which borrower will pay a lending fees, on which GST payable by the borrower of the securities. We don't have any exemptions, no condition for RCM, no non-applicability of RCM. Then I for import of services. In case of import of services by NTR, non-taxable recipient, other than OIDR services, it is exempted. Who is a non-taxable recipient? Individual, unregistered individual. Individual trust government will come under non-taxable recipient. Unregistered individual or government or trust. Individual importing for what purpose? Personal purpose. Government importing for non-business purpose. Trust importing for charitable activities. These three people will come under non-taxable recipient. So import of other than OIDR service by non-taxable recipient is exempted. OIDR means, so any service which is provided online over internet is coming under OIDR services. So I am an individual, unregistered individual. I am importing architect services for construction of my house. Then in that case, I am non-taxable recipient other than OIDR services imported by me, that activity will be exempted. Import of other than OIDR by non-taxable recipient. OIDR service whose delivery is mediated by information technology over internet. Non-taxable recipient, unregistered individual for personal purpose, trust for charitable activities, and government for non-business purpose. OIDR service includes online gaming, already we know, and OIDR service excludes online money gaming. Therefore, the provisions of OIDR service is not applicable to online money gaming. Then, condition for RCM. We don't have any condition for RCM. Non-applicability of RCM, yes. Import of OIDR services by non-taxable online recipient. GST payable by supplier under FCM. It is not covered under RCM. For example, OTT platforms, Amazon Prime, Netflix is an example of OIDR services. I am an unregistered person importing that. I will not pay GST, but supplier will pay GST. Who is a non-taxable online recipient? Any unregistered person importing services or a registered person who is registered only for deducting TDS. These two people will come under non-taxable online recipient. Any unregistered person or registered person only for deducting TDS. Then next, in case of renting of motor vehicles, we have 4 exemptions. I have a motor vehicle that has a capacity to transport more than 12 passengers and I am giving it on rent to a state transport undertaking. That rent is exempted. Number 2, I have an electric motor vehicle that can carry more than 12 passengers that I am giving on rent to a local authority, for which the local authority paid the consideration. That is also exempted. Then next, number 3, I have a motor vehicle that can carry goods that I am giving on rent to a goods transport agency, for which I get some consideration, exempted. Then next, I have a motor vehicle that I am giving on rent to a person who is providing transportation service to education institution up to 12th standard. Now I receive some money from that person. That is also exempted. Which education institution? Education institution up to 12th standard or equivalent. That is school. So these 4 exemptions. And next, condition for RCM. 3 conditions should be satisfied. All 3 conditions should be satisfied. supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. If any one condition not satisfied also, then it will be FCM. All three conditions should be satisfied. Then renting of residential property. For residential property, we have two exemptions: renting to an unregistered person and renting to a registered individual for their family stay. I have a residential property, I'm giving it on residential purpose to an unregistered person, exempted. If I'm giving it to a registered individual for their family stay, for example, there is a chartered accountant. Chartered accountant has taken a house on rent, but chartered accountant is a registered individual. He has taken a house on rent for his family stay, not for his office. So in that case, that rent will be exempted. Then, what are the conditions for RCM? Recipient should be registered, and non-applicability of RCM, we don't have anything. Then we have copyright services. In case of copyright services, that is temporary transfer of IPR. So we need to see total 4 copyrights: original literary, that is books; dramatic, that is story writing or screenplay; then musical, composing music; and artistic works, paintings, drawings, sculptures, etc. All these is covered under RCM, and we don't have any exemption, we don't have any condition. But for original literary point, that is, there is an author who is transferring the copyright of the book to the publisher or any person. Now, in that case, if the author opts to pay GST under FCM, then the author only will pay GST for the next 1 year from the date of exercising the option. So there is a lock-in for 1 year. Default option is RCM. Publisher only will pay GST. But if the author opts to pay GST under FCM, it will be shifted to FCM. For the next 1 year, author only should pay. From RCM to FCM, no lock-in. But FCM to RCM, there is a lock-in for 1 year. Then, goods transport agency services. So there are some notified goods transported by GTA, 6 notified goods: agricultural produce, food grains including flours, pulses, milk and salt, organic manure, then newspapers and magazines, defense and military equipment, and relief material for natural and man-made disasters. These 6 notified goods transported through GTA is exempted. Then second exemption, if the recipient is individual, HUF or AJP who are unregistered and not having a factory, then also it will be exempted. Or if the recipient is registered only to deduct TDS, then also it is exempted. These are the 3 exemptions for GTA services. And we don't have any condition for RCM. And GTA has 2 options. Either they can opt for FCM or RCM. If they opt for, default will be RCM. But if they opt for FCM, then they will pay GST. Again, there are 2 rates applicable to them. Either they can pay 12% with ITC or 5% without ITC under FCM. But this FCM option, they need to choose for every financial year. By when they need to choose? Previous year, last quarter. For example, current financial year 24-25, last year 23-24. In the 23-24 last quarter, Jan to March, they need to decide as to what option they need to choose in the current financial year. So, option to be exercised between 1st January to 31st March of the preceding financial year. Then, government services. Services provided by government to business entities is covered under RCM. But there are a lot of government activities, but not all government activities are covered under RCM. Only services provided by government to business entities is covered under RCM, and we have certain cases non-applicability of RCM also. First, this also includes services provided by parliament or state legislature, court or tribunal to business entities. So say this first: government service to business entities, including service of parliament or state legislature, court or tribunal. And court or tribunal basically is excluded from supplying, but court or tribunal, apart from legal service, may provide some renting services, etc. That is covered here. So in case of court or tribunal, it is service other than legal fees, that is renting. Then we have some specific exemptions, 14 specific exemptions and 2 general exemptions. So then it is exempted. In other cases, it will be taxable. First, we will see 14 specific exemptions. These are the exemptions with respect to services provided by government to business entities. So Right to Information Act charges, RTI charges. So government, when you need anything, information, you need to pay some charges and get, usually like students and all, in order to get the evaluated answer sheet, they apply in a RTI like that. Okay. This RTI charges which is collected by government is exempted. Interdepartmental service, that is one department to another department. Say income tax department is receiving the service from Tamil Nadu Police Department, that is interdepartmental service which is exempted. right to use telecom spectrum. I have a telecom spectrum. There is government is having telecom spectrum. They are giving it to the telecom operators and it is assigned before 1/4/2016. Both one-time charges and annual royalty will be exempted. Assignment of right to use natural resources. I have some natural resources which I am giving it to you and for which you paid one-time charges, exempted, but it should be assigned before 1/4/2016. Then you are an individual farmer. Government is assigning you right to use natural resources. Anytime it may be assigned, everything will be exempted. That is about these 3 points. Then merchant overtime charges under customs. Customs will be working after office hours, for which they will collect the overtime charges from the importers and exporters. Those charges are exempted. Then safety certificate charges. Safety officer, state government safety officer will be issuing a safety certificate. For issuing the safety certificate, they will collect some charges, that is exempted. Then consideration for tolerating an act. You enter into contract with government. You broke the contract. When you breach the contract, you need to pay some damages. So government is tolerating your act of breach, for which they get some money, that is exempted. Then share of profit petroleum. That is whenever government enters into joint venture with the leaseholder, wherein government will be giving assignment of right to extract petroleum crude or natural gas. Now, government apart from royalty will also receive the profit share. So out of this joint venture, some revenue is generated and expenses will be deducted. The leftover portion is profit. Out of the profit, government gets a share. That share of profit received by the government is exempted. Whereas the leaseholder will recover his expenses. That recovery of expenses is known as cost petroleum. That cost petroleum is also exempted. Cost petroleum is recovery of expenses by leaseholder, which is also exempted. Then registration charges under any law for the time being in force. For example, company incorporation charges or road RTO. So RTO also will register the vehicles. He will collect, sub-registrar will register the property and he will collect registration charges. All those registration charges is exempted. Then number 11, 5 certificates. So for obtaining 5 certificates, some fee will be collected by government like birth certificate, death certificate, driving license, visa or passport. That fees collected is exempted. Then guarantee commission for guaranteeing the loans taken by PSUs. Public sector undertakings will be taking the loans. Those loans will be guaranteed by government, for which PSUs will pay the commission to government. That commission received by government is exempted. Then excess royalty collection contractor. Government will appoint one person as ERCC, excess royalty collection contractor. That excess royalty collection contractor will pay the fixed royalty and will receive the variable royalty. Suppose if the fixed royalty is 60 lakhs and the variable royalty is 50 lakhs. On variable royalty, anyhow leaseholder will pay GST. So ERCC paying extra 10 lakhs because ERCC gives me variable royalty. I'm government. ERCC gives me variable royalty, and from leaseholder ERCC collects government. ERCC will give to the government fixed royalty, that is 60 lakhs, and ERCC will receive the variable royalty from the leaseholder, that is 50 lakhs. Means on that 50 lakhs already leaseholder would have paid GST. Now ERCC is required to pay GST only on 10 lakhs because fixed royalty is 60 minus variable royalty is 50. So on the 10 lakhs only he need to pay GST. What if the variable royalty is more than fixed royalty? Fixed royalty is 60 lakhs. The variable royalty is 80 lakhs. Already on 80 lakhs leaseholder will pay GST. So ERCC is not required to pay any GST. So remember, excess royalty collection contractor is not required to pay GST to the extent of variable royalty. Then fee for granting national permit to goods carriage to operate throughout the India. That is, whenever a commercial vehicle is crossing states, they have to pay the permit charges. Those permit charges collected is also exempted. Then these are the 14 specific exemptions that we have with respect to service provided by government to business entity. Then we have 2 general exemption. Apart from this, any other service provided by government to business entity except renting of immobile property, where the business entity turnover during the previous year does not exceed threshold limit, will be exempted. Or any service provided to business entity where the value of supply does not exceed 5,000, then also it is exempted. Suppose if it is a continuous supply of service. Continuous supply of service means a service which takes more than 3 months to complete and involves installments. In that case, we need to see 5,000 rupees per annum, not 5,000 rupees per month, 5,000 rupees in a financial year. So these are exemptions. We don't have any condition for RCM. However, in these 5 cases, RCM will not come, it is always FCM. Number one, suppose if government is giving immobile property to an unregistered business entity, then it will be FCM. In case of Indian Railways, services provided or goods supplied by Indian Railways also FCM. Then Department of Post is FCM. Transportation of goods or passengers also FCM. Airport or port service also FCM. Only services to business entities RCM. So what are the services of government which will not come under FCM? Which will not come under RCM? Immobile property to unregistered business entity, then railways, then Department of Post, transportation of goods or passengers, airport or port services. Sir, what about other activities of government? Other activities of government will be exempted, okay? Because only these activities of government is covered under taxability. All other activities of government will be exempted, that's why. Next means if they provide service to individuals and all, it will be exempted. O for overseeing committee services to RBI. So overseeing committee provides services to RBI, for which RBI will pay some consideration, that is covered under RCM. No exemption, no condition for RCM, no non-applicability of RCM. Then TDR, FSI and long-term lease, that is transferable development rights, floor space index, long-term lease of land. Long-term lease means lease for a period greater than or equals to 30 years by landowner to promoter or builder. Promoter or builder will pay GST under RCM. However, the promoter or builder is exempted to the extent of, residential units booked before completion certificate or first occupation, whichever is earlier. That is out of the total consideration into 18% into residential units booked before completion certificate divided by total carpet area of the project. To that extent, it will be exempted. And we don't have any condition for RCM, non-applicability of RCM. Sponsorship services. In case of sponsorship service, we have one exemption, sponsorship of a recognized sporting event. So there is a recognized sports body which is conducting a recognized sporting event for which they collect some sponsorship money, that is exempted. And next, we have condition for RCM. Sponsorship service will come under RCM if the recipient is body corporate or firm. If the recipient is not body corporate or firm, it will not be coming under RCM, it will be FCM. If the recipient is other than body corporate or firm. Then agent services. Total 5 agents are covered here. Insurance agent to insurance company. Then recovery agent to bank, financial institution, NBFC. Direct selling agent to bank, NBFC. Business facilitator to banking company. Agent of business correspondent to business correspondent. These 5 agents are covered under RCM. First, insurance agent to insurance company. Insurance agent providing service to the insurance company, we have an exemption. If that insurance agent is a business facilitator or business correspondent appointed in rural area, then the commission received by them is exempted. And we don't have any condition for RCM, non-applicability of RCM. There is a recovery agent. Recovery agent will recover the outstanding loans of the bank and for which they get a commission, RCM. We don't have any exemption, no condition, nothing. Then direct selling agent. Direct selling agent will bring in the business to the bank for which they get a commission. And we don't have any exemption, but condition for RCM is that supplier should be body corporate or firm. Supplier should be other than body corporate or firm. If the supplier is body corporate or firm, it will be FCM. If the supplier is other than body corporate or firm, then only it will be RCM. Then business facilitator to a banking company. Business facilitator is an agent who will do remittance activities, and business facilitator getting commission from the rural area branch will be exempted. And we don't have any condition for RCM, non-applicability of RCM. Agent of business correspondent to business correspondent. There is a business correspondent who will be appointed by bank as agent, and he will have a sub-agent. So that is agent of business correspondent who will provide service to business correspondent. Again, if they are working in rural area, then it will be exempted. And that is common for both business facilitator and business correspondents. And we don't have any condition for RCM, non-applicability of RCM. Then L. L refers to legal services by individual advocate or firm of advocate. We have total 4 exemptions. Suppose if the individual advocate or firm of advocate providing services to a person other than business entity, that is individual, then it is exempted. If they provide services to government, that is central government, state government, local authority, government authority or government entity, then also it is exempted. If they provide service to another individual advocate or firm of advocate, that is exempted. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, then also it is exempted. However, the third point, that is to another individual advocate or firm of advocate, is not applicable for senior advocate services. and we don't have any condition for RCM, non-applicability of RCM. Then arbitrator service. For arbitrator also the same set of exemptions except the third point, first, second and fourth point. Suppose if they provide services to a person other than business entity exempted, if they provide service to central government, state government, local authority, government authority or government entity, it is exempted. If they provide services to business entity whose turnover during the previous year does not exceed threshold limit, it is exempted. And we don't have any condition for RCM, non-applicability of RCM. Arbitrator will settle the disputes out of the court and advocate will settle the disputes through the court of law. Then D for director services. There is a director who is providing services to the company, and if the director is an employee of the company where the salary is being paid and TDS is deducted under 192, then whatever money that is being received by the employee director is not subject to GST because it is excluded from supply. So consequently, GST will not be there. However, if the director remuneration is deductible for TDS under 194J, then the money received by the director is not salary. It will come either under PGBP or IFOS. So that will be covered under supply and chargeable to GST. Under RCM, where liability to pay GST is on company or body corporate. That is this. So if director is employee of the company or body corporate where TDS is deducted under 192 of Income Tax Act, then it is not a supply. However, if TDS is deducted under 194J, it constitutes supply. And we don't have any condition for RCM. And if the director is providing services in his personal capacity, then don't apply this. You see it separately based on the service. When the director is providing the service in the capacity of a director, only you need to say this. For example, there is a director who gives his immobile property on rent to the company. That is not a director service. So separately, renting of immobile property, we need to check. Then security agency services to a registered person. For security agency services, actually we have one exemption. What is that? So there is a security agency, security services within premises, security services within premises to educational institution up to 12th standard or equivalent. 12th standard or equivalent. That is, there is an education institution which is providing education up to 12th standard or equivalent. For that, there are few services provided will be exempted, like transportation, catering, security and housekeeping. In that, security service is there. Security services within premises to education institution up to 12th standard or equivalent. Then, in case of security services, two conditions should be satisfied, then only it will be RCM. Supplier should be other than body corporate. Recipient should be registered but not opting for composition scheme or not registered only to deduct TDS. If any one conditions are not satisfied, then it will be coming under FCM. So this is about the list of services which are covered under 9 subsection 3. So you need to remember it like this only, because in exam when you see the question, so you need to first check exemption and then see condition, then only you need to arrive at whether it is RCM or FCM. Then next section, 9 subsection 4. 9 subsection 4 is not that important area because they have not at all tested any question related to 9 subsection 4. So to the extent possible, easily we will try to remember. Simple. That is, there is a promoter or builder who is purchasing from unregistered person. Suppose if he purchase from registered person, no need to pay GST. So they are purchasing capital goods. Capital goods purchased from registered person, no need to pay any GST. Suppose if they buy from unregistered person, they need to pay GST under RCM. At what rate? At the rate applicable to capital goods. That is simple. Then next, need to see cement. Cement purchased from registered person, no need to pay GST under RCM. But if they buy from unregistered person, they need to pay GST under RCM. At what rate? At 28%, because that is the rate applicable to cement at 28%. Then you need to see the balance inputs and input services. 20% is allowed to be purchased from unregistered person. So balance from unregistered person divided by total into 100. If it is less than or equals to 20%, means allowed, no need to pay GST. Suppose if it is beyond 20%, for example, 25%, up to 20 is only allowed, remaining 5%, you need to pay GST under RCM on that remaining 5%. At what rate? At 18% rate of GST. So then this denominator, while taking total inputs and input services, we need to include cement but excludes 5. TDR FSI long term lease, electricity, because there is no GST on electricity, petrol, diesel, and natural gas should be taken out. So this you remember like this, maybe in MCQ somewhere it could be tested, but not as a practical question because I have not yet tested so far. Then section 9.5, liability to pay GST on e-commerce operator in case of notified service. Already we know these notified services, but what you need to remember is the exceptions. That is, these are the notified service for 9 subsection 5. E-commerce operator will pay, but there are exceptions where e-commerce operator will not pay, some other person will pay, supplier only will pay. What is that? First, H for housekeeping services. In case of housekeeping services, so liability to pay GST is on e-commerce operator if the supplier is unregistered. Okay. However, if the supplier is registered, then supplier only will pay. If supplier is registered, supplier shall pay GST. Same way. Accommodation services. And accommodation service supplier should be unregistered. What if supplier is registered? Supplier only will pay GST. Then transportation of passengers in any motor vehicle. And condition, supplier may or may not be registered. So, but if it is through omnibus, that is an amendment. If it is through omnibus by a company, omnibus means capacity greater than 6 passengers. If it is through omnibus by a company, so supplier only will pay GST. If transportation is through omnibus by a company, then eating food from the restaurant. So that is covered under e-commerce operator. Let the restaurant be registered or unregistered, e-commerce operator will pay. However, if the restaurant is in the specified premises, what is the specified premises? A hotel, a 5-star hotel or a 3-star hotel, 2-star hotel, etc., wherein per day tariff is greater than 7,500 rupees. If the restaurant is in the specified premises, that is in a hotel having declared tariff greater than 7,500 per day, then supplier only will pay GST. These exceptions is what you need to remember. Then important points, whenever e-commerce operator is liable to pay GST under 9.5, TCS is not applicable. We have concept of TCS that is not applicable in this case. So remember section 9.5 and 52 TCS are mutually exclusive. Then number 2, only in case of notified services, e-commerce operator is liable to pay GST. In other cases, supplier shall pay GST and e-commerce operator shall pay GST on commission. So there are some notified services. On those notified services, e-commerce operator is liable to pay GST. However, in other cases, supplier shall pay GST and e-commerce operator will get a commission. On that commission only they need to pay GST. Then every e-commerce operator who is liable to pay GST or liable to deduct TCS is compulsorily required to get registered. Also, every supplier of goods through e-commerce operator is compulsorily required to get registered. For example, I am selling goods through Amazon. I should compulsorily register. However, if I am making only intrastate supplies, then I don't have to compulsorily register. I will register whenever aggregate turnover exceeds threshold limit. Until that point of time, I will obtain a unique enrollment number. Using that unique enrollment number, I will make supply through e-commerce operator. That is an amendment. That is, every supplier of goods through e-commerce operator is compulsorily required to get registered under GST irrespective of their aggregate turnover. However, if such supplier is making only intrastate supply of goods, then they should register as and when aggregate turnover exceed threshold limit for registration. Then supplier of notified service or supplier of other than notified service through e-commerce operator is required to get registered only when their aggregate turnover exceeds threshold limit for registration. That is, service provided through e-commerce operator is not compulsorily required to get registered. They should register only when aggregate turnover exceeds threshold limit. Then these are, with this segment 3 is over. These are the points. Any doubts in segment 3, pa? No, okay. Fine, thank you. Done. So, need a break? Can we take a small break and then continue with these exemptions? Yes. Okay. break. இல்லப்பா புதுசு போடுறப்பா பண்ணிட்டு இருக்கேன். லாஸ்ட் மினிட்ல தான் போடுவேன். Okay. There is a query to one friend. Sir, it was specifically said in the case of security services that the recipient should not have opted for composition scheme. There are other cases under RCM where recipient shall be any registered person, like in the case of renting of residential property. So can a composition taxpayer pay under RCM? Yes, of course. Composition taxpayer is also required to pay GST under RCM. Moreover, one important point is there that person who is under composition scheme will pay GST at the rate applicable to the inward supply. Usually composition scheme rate is 1%, 5% like that. But when they have some inward supplies on which they need to pay GST under RCM, the regular rate, for example, for security service 18% is 18% like that. So whatever is the rate applicable to that only should be taken. Yes, even a person under composition scheme will pay GST under RCM. Okay, fine. So that's it. Any other query? Done. Thank you. Now we are moving on to exemptions in GST segment 4. In these exemptions, we have agriculture related services. What you need to do with respect to these exemptions is that as many number of times as you can revise it, you need to revise and go for the exam, because in exam, you will see the situation, and if it is exempted, exempted. If it is not exempted, it will be taxable. Okay. So agriculture related services is the first area. The first exemption is any service in relation to agriculture or agricultural produce is exempted. I am providing service in relation to agriculture, or providing service in relation to agricultural produce for which I get some consideration, and that will be exempted. Okay. Here, what we need to understand is that the meaning of agriculture. Agriculture means cultivation of crops and rearing of life forms of animals other than horses. For what purpose? For food, fiber, fuel, raw material, or any other similar produce. And agriculture, any service in relation to agriculture, or any service in relation to agricultural produce. So agricultural produce means the primary produce out of agriculture on which no processing is done. They are not doing any processing, or some processing as is usually done by a cultivator, which does not alter its essential characteristics, but makes it marketable for primary market. So that is about agricultural produce. So you need to remember the definition of agriculture and agricultural produce. And you need to understand here, paddy is agricultural produce, which is a primary produce. But paddy to rice, when they do, so even though essential characteristics is not changed, but it is not an agricultural produce, which rice is not an agricultural produce because it is not usually done by the cultivator. Only that process usually done by cultivator, then only it will be agricultural produce. As rice is not an agricultural produce, in relation to rice, 4 activities are exempted. That is loading, unloading, packing, storage or warehousing is exempted. Then artificial insemination of livestock is exempted. The artificial process, they give injections for reproduction, that is exempted. But again, horses will not come in this. Services by way of storage or warehousing of cereals and pulses. Cereals and pulses is also exempted. And warehousing of minor forest produce is also exempted, but only storage. What if it is agricultural produce? Anyhow covered under the first point. So warehousing of fruits, vegetables and other agricultural produce is covered in the first point, and anyhow it is exempted. Then second, insurance services. In case of insurance services, there is an insurance company which is providing life insurance service under NPS, National Pension System Scheme. So NPS Trust will be providing insurance service. The premium collected is exempted. Then if it is group life insurance total 5: Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. These 5 group insurance funds is exempted. Service of general insurance business provided under government scheme. There is an insurance company which is providing general insurance services under government scheme, and the scheme is targeted to agriculture and farmers, below poverty line, women, and even Nirmaya health insurance, that is also exempted. Then life insurance under various government schemes. So again, there is an insurance company which is providing life insurance service under government notified scheme. That government notified scheme will end with the word Yojana. That is a government notified scheme. Also, micro life insurance having the maximum sum assured as 2 lakhs. Not minimum sum assured, maximum sum assured. First, it should be a micro life insurance, and the maximum sum assured should be 2 lakhs. Then insurance service provided to government. So government is receiving the insurance services. So I am providing insurance service to government for which I get some money from government. That is also exempted. Then So far, whatever insurance services that we have seen as exempted, its reinsurance is also exempted. For example, I'm insurance company A providing insurance to government. I get a premium exempted. Now I take reinsurance with another insurance company because I have a risk. I will mitigate the risk by taking insurance of this contract with another insurance company called as reinsurance. That reinsurance premium received is also exempted. Then if the main insurance is exempted, its reinsurance is also exempted. Then last one, service provided by business facilitator or business correspondent to an insurance company in rural area. Already we have seen that in RCM, that is exempted. Then banking and other financial services. The first exemption is interest on loans, advances, deposits is exempted. Interest or discount. Suppose if there is a transaction in money without consideration, it is neither goods nor services. If it is for a separate consideration, that will be treated as service. And if the consideration is represented by way of interest or discount, it is exempted. If it is any other consideration, including interest on credit card, then it will be taxable. Then there is a banking company which is providing services to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana, then it is exempted. Then foreign exchange transaction, that is money changing between banks, between forex dealers, between banks and forex dealers is exempted. Then there is acquiring bank which is providing the facilitation, settlement. Like whenever you make a card payment from your account, money will be debited and it will be credited to the vendor account. This job is done by the acquiring bank, for which the acquiring bank will collect a processing fees. That processing fees is exempted if the transaction amount does not exceed 2,000. Means if the card swipe does not exceed 2,000, the processing fees is there, but GST on the processing fees will be exempted. So GST on processing fee for a transaction up to 2,000 is exempted. Then there is a multi-service SEZ in India, that is Gujarat International Fintech City. In that Gujarat International Fintech City multi-service SEZ, there is a intermediary who provides services to their customers outside India in relation to foreign exchange. Then whatever charges that they collect will be exempted. Service by an intermediary of financial service located in a multi-service SEZ with IFSC status to a customer located outside India for international financial services, and it will not become export of service, because to become export of service, 5 conditions should be satisfied. Supplier should be in India, recipient should be outside India, and place of supply should be outside India. Consideration should be in convertible foreign exchange. Supplier and recipient are not two establishments of the same person. If these 5 conditions are satisfied, then it is export of service. But in case of intermediary service, the place of supply is location of supplier, so it will not come under export of services, but it is exempted. Then healthcare services. In healthcare service, only 2 exemptions. That is, healthcare services provided by a clinical establishment, authorized medical practitioner or paramedics is exempted. Healthcare service means what? Pre-treatment, that is diagnosis, treatment or care in any illness, disease, injury, deformity, abnormality, pregnancy. But it should be in any recognized system of medicine. And it also includes ambulance services, but it does not include 3: hair transplantation, cosmetic surgery and plastic surgery. But if these 3 are carried out to restore anatomy of body parts affected due to congenital defects, that is by birth, developmental abnormalities during the growth, or any trauma injury, then it will come under healthcare service. Generally, cosmetic, plastic, hair transplantation is not healthcare, but if it is carried out to restore the anatomy of body parts, then it will come under healthcare services. So that is the meaning of healthcare services. By a clinical establishment, that is a place where healthcare service is provided. It can be hospital, nursing home, etc. Authorized medical practitioner, minimum MBBS qualification and registered with medical council. Then paramedics, those who assist the doctors like nurse, lab technician, physiotherapist, compounders. So these people services will be exempted. However, room charges, if it is ICU charges, fully exempted. It can be normal ICU, neonatal intensive care unit, critical intensive care unit, or any ICU charges will be exempted. If it is other room charges per day, if it is less than or equals to 5,000, it is exempted. If it exceeds 5,000 entirely, it will be taxable. Then second exemption is healthcare service in relation to animals or birds, that is veterinary clinic services. And there are 3 circulars. Renting of room to inpatients in hospital and food supply to inpatients is part of healthcare service and it is exempted, but renting of rooms subject to this condition that the amount 5,000 that should not exceed. Service provided by consulting doctors to hospitals is also exempted. And service provided by way of ART or IVF treatment, ART or IVF infertility treatments for which they get some money, that is also exempted. Then there is a rehab professional. That rehab professional will be working in medical establishments or education institutions or rehab centers, and they provide the care or counseling, that is exempted. But in case of rehab centers, it should be government or trust operated rehab centers. Then only it is exempted. Suppose if it is private rehab center, then it will be taxable. Then entry tickets. In that entry tickets, irrespective of the ticket price, 6 entry tickets are there. And this last 2 is not applicable now because these events are already conducted. So just 6 entry tickets you remember, which are exempted irrespective of the ticket price. 3 related to animals, that is zoo, wildlife sanctuary, tiger reserve. Then 3 places, museum, national park, and protected monuments. These 6 entry tickets are exempted irrespective of the ticket price. Then 9 entry tickets are exempted if the ticket price does not exceed 500. What are they? 4 performance, dance, musical, concert, theatrical performance. Theatrical means drama, stage show, etc. And then 4 events, award function, circus, sporting event, pageant, and 1 place, that is planetarium. So these entry tickets are exempted if the ticket price does not exceed 500. Then pension services. There are 2 pension services, that is Atal Pension Yojana and any state government operated pension scheme. Then services by specified organization. There are some specified organization, ESIC, Employee State Insurance Corporation, EPFO, Employee Provident Fund Organization, NCCCD, National Center for Cold Chain Development, foreign diplomatic mission located in India, that is UN agencies or embassies or consulates in India, and CMPFO, Coal Mine Provident Fund Organization. These specified organization, if they collect any amount, that will be exempted. Then charitable and religious service, there is a charitable trust. That charitable trust providing specified charitable activities is exempted. There are only 4 specified charitable activities. Number 1, so that is public health. Number 2, advancement of religion, spirituality, yoga. Number 3, educational programs to orphans, physically or mentally traumatized persons, prisoners, and persons over 65 years residing in rural area. Then environmental preservation. So these are the 4 activities which are exempted. And next, service by old age home. There is an old age home which is run by government or a trust. They are providing accommodation or lodging facilities to the old people. Old people means greater than or equals to 60 years, where per month they are not charging more than 25,000 rupees. Then it will be exempted. Then 3, services by any person by way of conduct of religious ceremony. So religious ceremony, like a priest or purohit who is conducting religious ceremony, any money collected by them will be exempted. Services by specified organization for religious pilgrimage. There are 2 religious pilgrimage, Kailash Manasarovar and Hajj Yatra, for which they get some money, but it should be a specified organization, that is also exempted. These are the 4 exemptions for charitable and religious services. Then incubator and incubatee services. There is an incubate. Incubate is a laboratory where research is carried out. Incubator is the owner of the laboratory. Incubatee is the scientist who is working in that laboratory. Incubatee services will be exempted if the gross receipt does not exceed 50 lakhs. And this exemption is for a period of 3 years from the date of agreement. But services provided by incubator will be fully exempted if they are approved by Government of India. So incubator should be approved by government for availing exemption. Then services provided by incubator is exempted to any person. Whereas incubatee services is exempted up to 50 lakhs, provided previous year gross receipt does not exceed 50 lakhs, and this exemption is for a period of 3 years. So A Limited is a incubatee, gross receipt for first year 60 lakhs. So first year by default exemption is available because previous year is 0, and second year 40 lakhs, exemption not available because the first year it exceeds 50 lakhs, and third year 70 lakhs, exemption available because the second year it is not exceeding 50 lakhs. So 50 lakhs is exempted. Accordingly, the taxable value will be 10 lakhs, 40 lakhs and 20 lakhs. Then education services. Services provided by an educational institution to its students, faculty and staff is exempted. So what is the meaning of an educational institution? See this point, any service provided by an educational institution, to whom it should be providing? Students, faculty and staff. Educational institution is divided into 3 categories. First, up to 12th standard, that is preschool education, up to 12th standard will come in the first category. Then education as a part of curriculum for obtaining a qualification recognized by Indian law. That is second category, like UG, PG, professional courses. Then 3, approved occasional education. And we have one point here that approved occasional education means any course offered by ITI or ITC, Industrial Training Institute or Industrial Training Center affiliated to NCVT, SCVT, National Council for Vocational Training, State Council for Vocational Training, or Modular Employable Skill Course by Ministry of Skill Development under Government of India. So that only comes under approved occasional education. Then there is one circular here, as any service provided by education institution to students, faculty and staff is exempted. What if there is a prospective student to whom we are selling the application or prospectus, whether that is also exempted? Yes. If there is a ex-student who is leaving the education institution, he will be paying some money for transfer certificate or migration certificate, that is also exempted. Application fee for entrance or fee charged for issuing eligibility certificate or fee collected for issuing migration certificate to ex-student is also exempted. That is this. Then next, second, services provided by an education institution by way of conduct of entrance examination. Suppose if there is an education institution, they are conducting only entrance exam. Only after writing the entrance exam, if they qualify, they get a seat, they are students. Until the point of time, they are not students. So this entrance exam fee collected is also exempted. And here, where there is one circular, there is an educational board or examination board. That examination board sole objective is to conduct the entrance examination. By conducting the entrance examination, they will be giving the result, but they will not give any certificate or qualification. Even then, that examination board, like National Testing Agency, National Board of Examination, is also an education institution. Then amount paid to training providers under Deen Dayal Upadhyaya Grameen Kaushal Yojana, DDUGKY scheme, and they are providing occasional training, and that is also exempted. Then service provided by National Skill Development Corporation, NSDC, which is set up by central government, or Sector Skill Council approved by NSDC, assessment agent or training partner in relation to any notified program or course or scheme is exempted. Then service provided by an education institution. There is an education institution which is providing the service to its students, faculty and staff. Already we saw that. Service provided to education institution. This is 2. Now the education institution is the recipient. You have to remember first 3: transportation, catering, security and housekeeping within the premises to category 1 institution is exempted. Admission to or conduct of examination, all 3 category institutions exempted. Supply of online educational journals and periodicals only for category 2 institution is exempted. Then there is an Anganwadi school which is also an education institution. So catering service provided to Anganwadi school is coming under category 1 because catering to category 1 is exempted. Whether the fund is from government funds or corporate donation, that is relevant, but catering service provided to Anganwadi school is coming under exemption. Then services by assessment bodies. There are some assessment bodies which will evaluate the curriculum, review the changes, etc. Under skill development initiative, they receive some money, that is exempted. Remember, assessment bodies under skill development initiative is exempted. Then next, services provided by government. Already we saw some points. That is, services provided to business entities we covered in 14 specific exemptions and 2 general exemptions. In liability to pay GST, this is the other aspects. For Department of Post, we have 3 exemptions. That is, postcard, inland letter, and any registered post or book post of envelope less than 10 grams is exempted. All other activities of Department of Post will be taxable, like speed post, express parcel post, life insurance, and agency, etc. taxable. For transportation of passengers, goods or transportation of passengers, we have a separate discussion. For Indian Railways, other than transportation, fully it is taxable. We don't have any exemption other than transportation. Then services to aircraft or vessel. This is the amendment. Indian Railways, other than transportation, everything else is taxable. We don't have any exemption. Services to aircraft or vessel from, in outside the port or inside the port or outside the airport or inside the airport. Remember, airport or port service is always taxable. All other activities apart from this 5, all other activities are exempted. What are the 5? Department of Post, Railways, transportation, airport or port, service to business entities, rest and all will be exempted. Then service provided to government. Government is required to do certain activities under Article 243G or 243W of the Constitution. So under municipality or Gram Panchayat, they have to do some activities. Those activities are outsourced to me. Now I am providing the pure service to the government by way of cleaning the garbage, etc. Solid waste management service, pure service, it is exempted. If it is a composite supply of goods and services where the value of goods does not exceed 25% of the total, then also it is exempted. Service provided by any person to government with respect to functions entrusted to government under Article 243G or 243W of the Constitution. So pure service are exempted. Even composite supply of goods or service where the value of goods does not exceed 25% of the total value is also exempted. In this regard, there is one amendment. Public Works Department, PWD. So this Public Works Department is also government, and they will receive some services like maintenance of park, maintenance of street lights, etc. In that case, whether exemption is available, yes. So whenever I am providing service to Public Works Department by way of maintaining the park, that's a pure service. So therefore, it will be coming under exemption. Then milling of wheat into wheat flour. So in North India and all, in ration shops, they will be distributing wheat flour, for which government will procure the wheat flour. Now I am providing composite supply of wheat flour, wherein I am buying the wheat, converting into wheat flour, and I am giving. Wheat is goods, wheat flour is, that conversion is services. But here the value of goods exceeds 25% of the total. If the value of goods does not exceed 25% of the total, then only it is exempted. If the value of goods exceeds 25% of the total, entirely it will be taxable. That is this. Then second point, any person providing services to government authority. Easily remember, say there is a person who is living in a slum, and in that slum there is like lot of water scarcity, water properly not available, and so drainage and all, full lot of drainage is there. So then in this drainage, because of the drainage, their health got spoiled. First, a person is living in the slum, and that person who is living in the slum, so there is like no water. Usually in slum, water problem will be there, and drainage and all will be open drainages. Because of the open drainages, lot of diseases they will be getting, so health gets spoiled, and they request the government, and the government is doing the clearance, waste and all they are clearing. Okay, so you remember this story. First, what is the activity? Slum improvement and upgradation. Then next, water supply, water scarcity, water supply, and then so sanitation and conservancy, drainages, putting the chemicals and all in drainages, that is sanitation conservancy. Then their health gets affected, so public health, and they are requesting the government to do the solid waste management, clear the waste, solid waste management. So these activities provided to government authorities exempted. Okay, so only slum improvement upgradation, water supply, then sanitation conservancy, public health, solid waste management to government authorities exempted. Okay, then next, any training program for which greater than or equals to 75% of the expenditure is borne by government. So government is bearing greater than or equals to 75% of the total training expenditure. So then the training program is exempted. Then services provided by any institution or NGO under Central Scheme of Scholarship for Students with Disabilities, where total expenditure is borne by government. So then also the difference between these 2 points is that previous case training program, just 75% if the expenditure is borne, the training program is exempted. Next case, it should be a scholarship for students with disabilities, then entire expenditure borne by government, the training program is exempted. Then renting services. In case of renting, already we know renting of movable property for renting a motor vehicle is exempted. So hiring of motor vehicle that can carry more than 12 passengers to state road transport undertaking, or electric vehicle to local authority, or we have a motor vehicle that can carry goods to a GTA, or hiring of bus to a person who can provide transportation service to education institution up to 12th standard. These four already we know. Whereas immovable property, building also already we discussed there. That is two exemptions we have. That is renting of residential property for residential purpose to an unregistered person, or renting of residential property to a registered individual for their family stay is exempted. For land, we need to separately remember the exemption. There is a land which is given on lease, any type of lease. Who owns the land? Government owns the land. So there is a government land, that is government land given on lease to government authority or government entity. Government giving its land on lease to government authority, government entity, for which they get the lease rentals. Any type of lease. And what is exempted? Upfront charges and annual lease rentals. Both are exempted. Then another point. SIDCO, State Government Industrial Development Corporation. SIDCO owns the land. That land they're giving on lease to either industry or infrastructure developer. So either that is SIDCO, State Government Industrial Development Corporation, is giving the land on lease for development of infrastructure of finance business or industrial plots. Okay. But only upfront charges is exempted. Only upfront charges is exempted, but not annual charges. Only upfront charges. And that too, it should be a long-term lease. Long-term lease means lease for a period greater than or equals to 30 years. Then only it is exempted. Next, you need to remember the difference between these 2 points carefully, so that in exam when it is given as land on lease, don't get confused. Then there is a precincts of a religious place meant for general public, and that is registered as a trust. Now the precincts means surroundings are given on rent. For what purpose? If it is given on rent for accommodation, stay, less than 1,000 rupees per day, exempted. If it is for renting of hall, less than 10,000 per day, exempted. If it is for shop, less than 10,000 per month, then it is exempted. Next, sports services. In sports services, first, if the sports authority, that is recognized the sports body, collects sponsorship money, that is exempted. So what is a recognized sports body? So total we have 6. National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. These are the 6 sports bodies which are recognized sports bodies. They collect any sponsorship money, that is exempted. Apart from this, any other person, any other sports body collecting sponsorship money will be taxable. If the recipient is body corporate or firm, it will come under RCM. If the recipient is other than body corporate or firm, it will be coming under FCM. Then services provided by a player as a services provided by an individual as a 5. Player, referee, umpire, coach, team manager. The two to recognize sports body is exempted. What if they are not player, referee, umpire, coach, team manager, some other person like selectors, commentators, etc.? That will be taxable. Then next exemption, service provided by one recognized sports body to another recognized sports body. For example, BCCI is one recognized sports body. Indian Hockey Federation is another recognized sports body. So one recognized sports body to another recognized sports body, that is exempted. Then next, there is an unincorporated association or a non-profit entity, so which will be providing service to its members, and it will be exempted provided it is a trade union, means association of traders, or industrial or agricultural labor union, association of labor, industrial labor or agricultural labor, or if the service itself is exempted service. Suppose if the association is providing healthcare services to its members, anyhow healthcare service is exempted. So if it is given to its members also, it is exempted. Whereas if it is a resident welfare association, that is apartment owners association, which will be incurring the common area expenses of the apartment and recovers the maintenance charges. The maintenance charge is exempted provided it does not exceed 7,500 per member per month, up to an amount of 7,500 per member per month. Suppose if it is as an entity for promotion of trade, commerce and industry, apart from this, any other entity, up to 1,000 rupees per member per annum is exempted. If it crosses 1,000 rupees, then entirely it will be taxable. That is with respect to services by unincorporated entity to its members. Then in this regard, there is one circular, that is, there are some malls, shopping complexes, etc. They will be, like paying the, that is association, like shopping complex association or resident welfare association. They will pay the electricity bill of the members and recover that electricity bill from the members. Now, in that case, whether that will be covered under the 7,500, no, that will not be covered under 7,500, because first of all, that is the EB bill of the member, which is paid by the association. So don't add it in 7,500. So apart from this, you see remaining amount as maintenance charges. If it does exceed 7,500, then it is taxable. But while computing 7,500, this EB charges should not be added. So if electricity bill is paid on behalf of members and claim reimbursement of electricity charges from the members, it shall not form part of value. Okay. What if it is common electricity? Even common electricity charges, if it is actual charges, that much is only recovered from the members. Actually 5,000. That 5,000 is only recovered. Actually 50,000. That 50,000 is only recovered. Then in that case also don't include it in the value. Suppose if they make any gain, like ad hoc they will collect. Ad hoc they will collect, like whatever may be the actual, you pay constant 10,000 rupees as electricity charges, common electricity charges like that if they say, then definitely it should be included in the value. Collect charges from members on ad hoc basis, which sometimes exceeds the actual electricity charges, it shall form part of the value entirely. Then, in case of resident welfare association collects an amount exceeding 7,500 per month per member, then entire amount will be taxable. Next one, transportation of passengers. So, transportation of passengers, we have railways, 2 exemptions. First, transportation of passengers. We are talking about railways. In case of railways, we have 2 exemptions. If it is other than first class or AC, like general ticket exempted, sleeper class exempted, or second class sitting exempted, then metro, mono and tramway is also exempted. Let it be AC, non-AC, that is irrelevant. Then airways. For airways, again, we have 2 exemptions. If the starting point or ending point of the passenger is in northeastern state or Bagdogra in West Bengal. What are northeastern states? Manipur, Mizoram, Tripura, Nagaland, Assam. MMTN, ASAM. Manipur, Mizoram, Tripura, Nagaland. A, Assam. Then yes, Sikkim. A, Arunachal Pradesh. M, Meghalaya. If the starting point or ending point is in these places and that too in economy class, then it will be exempted. Whereas consideration for viability gap funding. So government will pay some money to airlines for reducing the airfare in regional connectivity airport. That money which is received from government is exempted for a period of 3 years. Then for waterways, again, we have 2 exemptions. One is inland waterways exempted, coastal waters, that is vessel, seaways between places in India only with respect to notified, like case. What is that notified here? Other than tourism means public transportation. Inland waterways, transportation of passenger is exempted. Coastal waters also exempted for what? Public transportation. If it is for tourism purpose, then it will be taxable. And whether it may be government operated or private operated ferry, it will be exempted if it is for public transportation. Then for roadways. So transportation of passengers in roadways, we have 3 exemptions. Non-AC stage carriage. Stage carriage means which stops at every stage of the journey. Lot of buses we see, every stop they will be stopping and going. Even share autos that will come under stage carriage. If it is a non-AC stage carriage, it is exempted. Whereas contract carriage means point-to-point travel. That is also exempted if it is non-AC, but it is other than hire or tourism. And metered cab or auto rickshaw is exempted. However, these 3, that is non-AC stage carriage, non-AC contract carriage other than tourism or hire, and metered cab or auto rickshaw, if it is through e-commerce operator, exemption not available. Generally auto exempted. If it is Ola or Uber auto, then it will be taxable. Then transportation of goods. So far what we saw is transportation of passenger. Now this is in relation to transportation of goods. For railways, only 1 exemption, that is specified goods transported is exempted. Airways, only 1 exemption, outside India to India. So goods transported from outside India to India is exempted. Waterways, 2 exemptions. Inland waterways, same like passenger transportation, also inland waterways. Here also inland waterways is exempted. Coastal waters is exempted only with respect to specified goods. Okay. So specified goods comes in 2 places, railways and waterways, coastal waters within India. Roadways, other than GTR courier, everything else is exempted. Normal lorry transportation, porter or Tata Ace, etc. We transport goods, that will be exempted. Only GTA, goods transport agency or courier agency alone will be taxable. But for GTA, again, we have some exemptions. Then you can see what are those specified goods. This specified goods exemption is there for GTA as well. Because for GTA, we saw 3 exemptions: specified goods, and then if the recipient is government, which is registered only for deducting TDS, or if the recipient is individual, HUF, AJP, unregistered and not having a factory. So specified goods comes in three places: railways, coastal waters and GTA. These specified goods are same, 6 specified goods: agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, defense and military equipment, relief material for natural or man-made disasters. And basically, who is a GTA? Goods Transport Agency is a person engaged in transportation of goods by road and issues a consignment note by whatever name called, then they are called as Goods Transport Agency. And the rate applicable for GTA, there are two rates, two options: FCM, RCM. If it is RCM, always 5%. If it is FCM, again two rates are there. If they want ITC, that is GTA wants ITC, 12%. If GTA don't want ITC, then it will be 5%. And this FCM versus RCM, they need to decide with respect to each financial year by previous quarter, that is 1st Jan to 31st March of the previous quarter, and option 1 selected remains till the subsequent selection is made. Then we have one circular related to transportation. There is a owner of the vehicle who is giving his non-AC vehicle to a person, and what is that purpose? If it is operated on a predetermined route on a predetermined schedule. For example, you are one company. You are asking me to pick your employees morning in this location and drop again in the respective location. Now, whatever money I collect will be for contract carriage other than tourism or hire, and it is exempted because it is non-AC. So, contract carriage other than tourism or hire, and it is exempted. Suppose I give you the vehicle and the vehicle is at your disposal full day. If it is predetermined route, after that I will be having vehicle with me. But if it is full day, I am giving the vehicle to you. For what purpose? For a particular journey or voyage. Say you are taking all your employees on a trip, say Ooty trip. For that Ooty trip, I gave the vehicle for 3 days along with the driver and all. Now, whatever money I collect is for contract carriage for hire. Contract carriage for hire or tourism, and that will be taxable. We don't have any exemption. However, even though non-AC, taxable. However, if it is for a period of time, you are taking the vehicle on rent, you are taking the vehicle is at your disposal for 1 month, 2 months, 3 months like that, then it is renting of motor vehicle, and renting of motor vehicle taxable, but we have to check whether it is FCM or RCM. If 3 conditions are satisfied, it will be RCM, otherwise it will be FCM. For contract carriage, we don't have FCM, RCM, but for renting a motor vehicle only, we have FCM, RCM. Then, import of services. Import of service divided into 2. OIDR service other than OIDR service. OIDR service always taxable. If imported by non-taxable online recipient, it will come under FCM where supplier will pay GST. If it is imported by other than non-taxable online recipient, it will be taxable under RCM. But other than OIDR service imported by non-taxable recipient will be exempted. Other than non-taxable recipient will be taxable under RCM. Who is non-taxable recipient? Unregistered individual, trust or government. Trust for charitable activities, unregistered individual for personal purpose, government for non-commercial purpose. Then it is exempted. Who is a non-taxable online recipient? Any unregistered person or a person who is registered only for deducting TDS. And OIDR service means online services which is completely provided over internet, and without internet it cannot be provided, and it includes advertising on the internet like Instagram, YouTube, and providing cloud service like QuickBooks, SAP, then provision of ebooks, so Kindle, Spotify, providing data or information like some courses which we can enroll and study, Udemy, or designing, that is Canva, online supplies of digital content like Netflix, Amazon Prime, digital data storage, iCloud, Google Drive, and online gaming. And online money gaming will not come under OIDR services. And we have seen already what is NTR, NTOR. Whenever GST is payable under RCM, that person is compulsorily required to get registered. Even this supplier who is liable to pay GST on OIDR services located outside India is also compulsorily required to get registered. Then, when it comes to construction services, next area, construction services. So, if I am providing pure service by way of constructing an individual house, for which whatever money that I am receiving is exempted. Construction of an individual house. That individual house can be a big bungalow also, But what is an individual house? A house occupied by a single family is individual house, but only pure labor contract and not works contract, which means I should not provide any goods. They should buy the material, I should do only construction, then it is exempted. Whereas second point, construction repair. In the first point, only construction, but in the second point, construction, repair or alteration. There is a project which is notified by government, Pradhana Mantri Awas Yojana or Housing for All mission. For that project, I am providing the construction service or repair service or alteration service, and for which I get some consideration. Again, it should be a pure labor contract and not a works contract. Then also it is exempted. Then whenever I am selling the flat, I am also selling the undivided share of land below the flat. So then what should be treated as the value? So take the total value of the flat. For example, I am selling a flat for 75 lakhs. In that, 1/3 is deemed to be the value of the land. So 75 minus 1/3, that is 25 lakhs. Remaining 50 lakhs only will be taken as a value on which GST will be payable. So 1/3 of the gross value of flat is exempted towards land or undivided share of land, where gross value includes value of land. Then transfer of development rights. So that is whenever there is TDR, FSI, long-term lease, which is transferred by landowner to promoter or builder. Already we know that it is covered under RCM, but we have an exemption. To what extent it is exempted? So value of inward supply into 18% into floor area of residential units booked before completion divided by total floor area of all the flats in the project. That is, say there are 100 flats. Out of that 100 flats, 40 are residential booked before completion. So 40 by 100 to the extent of 40%, the inward supply will be exempted. Then individual advocate services, already we know. For advocate or firm of advocate, we have 4 exemption. That is, services provided to a person other than business entity, exempted. Services provided to another individual advocate or firm of advocate, exempted. Services provided to central government, state government, local authority, government authority or government entity, exempted. Services provided to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. For senior advocate and arbitrator, we have only 3 exemptions. If they provide service to other than business entity, government, turnover during previous year does not exceed threshold limit. Suppose if senior advocate is providing service to another individual advocate or firm of advocate, the ultimate litigant or applicant or petitioner should be treated as the recipient. The ultimate litigant, applicant or petitioner should be deemed as recipient, and then advocate and an arbitrator is not required to get registered if they are exclusively covered under RCM. For example, I am an advocate. My outward supply will be either exempted or covered under RCM. Then I don't have to register at all. I am exempted from registration. Then we have some miscellaneous exemptions under IGST Act. First, if both supplier of service and recipient of service are located outside India, all services are exempted. Then there is a tour operator who is providing tour operator service to a foreign tourist, where the tour is conducted fully outside India, then the tour will be, that package will be exempted. Indian tour operator providing tour operator to a foreign tourist. Say, for example, Indian tour operator providing tour operator service to a person in USA in relation to tour in Sri Lanka, then the tour service will be exempted. Then, suppose if the tour operator is providing the tour service partly in India, partly outside India, then also proportionate to the tour conducted outside India, it is exempted. How to compute the proportion? Total consideration into number of days the tour conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower. To that extent only it is exempted. Total consideration into number of days tour outside India divided by total number of days, or total consideration into 50%, whichever is lower. While computing this, if the number of days tour outside India, suppose if it is for hours, like 3 days, 12 hours like that. So then if it is exactly 12 hours or greater than 12 hours, take it as full day. Less than 12 hours, you consider it as half a day. Then service provided by an intermediary. So I am an intermediary, I am an agent. I am connecting seller outside India, buyer outside India. I get a commission. That commission is exempted. Service provided by an intermediary when location of supplier and recipient is outside the taxable territory, the commission earned by them is exempted. Then we have some miscellaneous exempted services, that is transfer of a going concern. I am having a business, I am transferring that business lock, stock, barrel completely. Then whatever consideration like slum sale, sale of undertaking, sale of business, amalgamation, merger, that purchase consideration is there now, that is exempted. Then transit cargo to Nepal and Bhutan. So any person in Nepal and Bhutan, if they want to import goods by seaways, the goods will be imported first in India. Thereafter, it is transported to Nepal and Bhutan. And this is known as transit cargo. For this transit cargo, if you provide any service, loading, unloading, transportation, that is exempted. Not only onward, even return journey, if the vehicle returns empty, for the return journey, we collect some charges, that is also exempted. Both to and from covered in exemption if the cargo container returns empty. Then there are some independent journalists, Press Trust of India, United News of India, money collected by them is exempted. Just directly it will be given. Press Trust of India, United News of India, independent journalists exempted. Then public libraries also lending fees will be exempted. Then there is an organizer who is conducting the business exhibition outside India. Remember, the business exhibition should be conducted outside India, not in India. Then services by public conveniences like lavatories, toilets, etc. So public toilets, the money collected by them is exempted. Service by way of access to road or bridge on payment of toll charges. Generally highways, we use the road and for which we pay the toll charges is exempted. Even the overloading charges, sometimes huge vehicles, heavy vehicles and all, they will also pay extra charges, extra toll charges, that is also exempted. Sometimes the fast tag will not work, for which we need to pay extra charges, that is also exempted. All these are toll charges only. However, government will pay by way of annuity. They will not pay toll charges every time they use. So fixed amount, they will be paying like annuity, yearly some amount. So that is not exempted, that will be taxable. Other than payment by way of annuity. Then overloading charges at toll plazas also exempted. Higher toll charges for not having functional FASTag is also exempted. Then service by performance artist. There is a performance artist who is performing in either classical or folk art form of music, dance or theater. It should be either classical or folk, and either it should be in dance, music, theater, and the consideration should be not more than 1,50,000 per performance, then it is exempted. If the consideration exceeds 1,50,000 per performance, then entirely it will be taxable. Then service by way of training or coaching in recreational activities relating to arts, culture or sports is exempted. Then that is, we are providing training or coaching in recreational activities in what? Arts. Arts or culture, that should be by an individual. Sports should be by a charitable trust. Then last, satellite launch services provided by any person. So that can be any person, ISRO or Antrix Corporation, any person. Satellite launch service is exempted. So these are the various exemptions that we have. So with this segment is over. Any doubts, Pa? So majorly we completed exemptions and RCM. Okay, exemptions and RCM we have discussed, and lot of questions will be on this. Then we are moving on to time of supply. Segment 5, time of supply. In time of supply, we have section 31, section 12 and section 13. Section 31 talks about due date of invoice. What is the due date of invoice? So goods, there are 3 provisions. In normal cases, supply involves movement of goods. So at the time of removal, we need to raise the invoice. That is a due date. Supply does not involve movement of goods at the time of delivery. And in case of continuous supply of goods, what is a continuous supply of goods? Means there will be successive supply of goods for which the payments are settled on a periodical basis. First, if the payments are received, irrespective of the account statement, the payment received date, the payment is received based on account statement. Means first ad hoc some amount is received. As and when we receive, we need to pay the GST on that and we need to give the invoice. Suppose if the payments are receivable based on account statement, we give an account statement. So how much it is total? Based on that, if we receive the payment, the account statement date will be taken. So account statement date or the payment received date, as the case may be. Then sale on approval or on return basis. In case of sale on approval or on return basis, we need to see 6 months from the date of removal or date of acceptance by buyer, whichever is earlier will be taken. Then in case of services, we have three: normal cases, continuous supply of service, and cessation of services. For normal cases, if it is banking or insurance sector, that is 45 days from the date of completion. If it is any other sector, 30 days from the date of completion. Whereas in case of cessation of service, so we need to give the invoice immediately upon cessation. Whereas continuous supply of service, what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations, then it will be called as continuous supply of service. We need to check whether due date of installment is ascertainable from the contract. If due date of installment is ascertainable from the contract, then the due date of installment. If due date of installment is not ascertainable from the contract, as and when the payment is received. If payment is linked to completion of an event, so then as and when the event is completed. Like this we need to take. And continuous supply of service means two conditions. It should take more than 3 months to complete and should involve periodic payment obligations. Both the conditions should be satisfied. Then what should be taken as the time of supply in case of goods, in case of services? Section 12, goods. Section 13, services. First, subsection 1 talks about time of supply. Liability to pay GST depends upon the time of supply. Subsection 2 talks about FCM. Goods FCM is 12.2, service FCM is 13.2. First, we will see goods FCM. In case of person opting for composition scheme or specified actionable claims, we need to take 3 dates: due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Actual date of invoice is the date on which you are giving invoice. Due date of invoice is determined as above, and date of payment, whichever is earlier. However, in case of others who are engaged in supply of goods, that is other than those opting for composition scheme or other than specified actionable claims, it will be only 2 dates: due date of invoice, actual date of invoice, whichever is earlier. Then in case of goods under RCM, 12 subsection 3, goods RCM, we have 3 points. The date on which goods are received by the recipient. We need to see from recipient point of view because it is RCM. The date on which recipient has received the goods, the date on which recipient has made the payment to supplier, or 31st day from the date of invoice, whichever is earlier will be taken. Now, whether GST payable on advances, wherever date of payment is there, definitely GST will be payable on advance because payment received now and the supply will be in future. Now itself we need to pay GST for that reason. So in this case, date of payment is there, so GST payable on advance. In this case, date of payment not there, so GST not payable on advance. But here date of payment is there, so GST payable on advances. Now look into 13 subsection 2, services FCM. We need to see if the invoice is given within the due date or not. If the invoice is given within the due date, then the actual date of invoice or date of payment, whichever is earlier. If the invoice is not given within the due date, then completion date or payment date, whichever is earlier, should be taken. Whether GST payable on advances, yes, GST payable on advances because date of payment is also one of the date. Whereas in case of services under RCM, 13 subsection 3, this date of receipt of goods will not be there. So date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier will be taken. Then in case of vouchers, so in case of vouchers, we need to see whether it is an identifiable voucher or a non-identifiable voucher. If it is an identifiable voucher, at the time of issuance of voucher, identifiable voucher means that voucher will be redeemed against a particular product or particular service, then it is identifiable. So whenever I give the voucher, that is the time of supply. Non-identifiable voucher, which can be redeemed against supply of any goods or services, the date of redemption of voucher will be taken as the time of supply. And this is common between goods and services. Then subsection 5. Subsection 5 is residual cases. Residual cases is applicable whenever there is an evasion and GST department is identifying this. Whether that person is required to file any periodical return, yes. Then the due date of return is the time of supply. If the person is not required to file any periodical return, the date on which the person pays tax to government, that is the time of supply. Whereas last case, in case of any interest, late fee or penalty for delay in receipt of consideration, then as and when that additional consideration is received. So for example, I have given you an invoice, you have to make payment in 30 days. You have not made payment to me in 30 days. So I will be charging you an interest. and that interest you will pay thereafter. As and when you actually pay interest, on the date only I need to pay GST on that interest. That is the time of supply on receipt basis. Then look into these additional points. What should be taken as the date of payment? From supplier point of view, date of entry in the books or date of credit in the bank account, whichever is earlier, will be taken as the date of payment. Whereas from recipient point of view, if you see date of entry in the books or date of debit in the bank account, whichever is earlier. And this point already we know. In case of goods covered under FCM, on advances, GST not payable other than specified actionable claims and composition scheme, but GST payable on advance in case of services. Then 1,000 rupees received in excess. Say I am raising an invoice for 13,200, but you made a payment of 14,000, means you paid 800 in excess. What is the treatment of this 800? I have two options. I can pay GST this month itself, because payment 800 this month, invoice next month, whichever is earlier this month itself. So I have to pay GST on 800 this month. Or another option I have. What is it? Another option. On this 800 rupees, anyhow I am going to give invoice in the future. At the time I will pay GST. But this facility is available to me only if the excess amount is up to 1,000 beyond the invoice value. Then in case of supply between associated enterprises, in exam it will be given, don't worry, who are associated enterprises. In case of supply between associated enterprises, we need to see the date on which payment is made to supplier, and there won't be invoice between associated enterprises. So the date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier, should be taken. Then one more point, when the goods are taken outside India for exhibition, it is actually not a supply. However, if the goods are not brought back within 6 months from the date of export, then section 31 subsection 7, sale on approval or on return basis concept will come, which says from the date of removal within 6 months, if the goods are not coming back, it is deemed to be supplied and we need to raise the invoice. So goods taken outside India for exhibition is not a supply, but when the same is not brought back within 6 months, it is deemed to be supply in terms of 31 subsection 7. Then this is an amendment. What is the time of supply in case of construction of hybrid annuity model projects to National Highway Authority of India? What happens in this hybrid annuity model projects, wherein I will lay down the road and I will only operate that, and thereafter I will be collecting some money from the government. Okay, here HAM contract is a single contract where the supplier is responsible for both construction of highway and its operation and maintenance over a period of time. For example, I am L&T and National Highway Authority of India is asking me to lay down a road, okay, somewhere in Tamil Nadu, one place to another place. And for this, L&T will lay down the road. We'll also do the operation, because road laying down means we cannot lay down and go na. So from time to time, if there is any repairs, rainfall, etc., we need to rectify those repairs. So operations and maintenance over a period of time. Now, as this takes more than 3 months to complete, it's a continuous supply of service and involves installments, annuity. Annuity means installments. So it is a continuous supply of service, and due date is determined as per section 31 subsection 5 and time of supply as per section 13 subsection 2. Now, installments will include interest component also, which is part of value as per section 15(2)(d). Okay. So installments payable by NHAI will also include interest component, which is part of value as per 15(2)(d). Now, what is that they are telling? Whatever installments that we are getting, on that installments, how to determine the time of supply? Simple. That is as per 13 subsection 2. Okay. That is normal. If invoice is within the due date, invoice date or payment date, whichever is earlier, invoice not within due date, completion date or payment date, whichever is earlier. But how to check whether invoice is within the due date or not? So continuous supply of services. What is that continuous supply of service? If due date of installment ascertainable, the due date of installment. If due date of installment not ascertainable, then the date on which payment is received. If payment is linked to completion of event, as and when the event is completed. Then next. And what about interest? For interest, should we treat separately? No, that interest should be included in the value of installments. That's what they're telling. Installments include the interest component. So with this, time of supply concept is over. And in time of supply, there is some other area like invoice, tax invoice, etc. and all that we will see separately. Okay. Then look into the next area, segment 6, value of supply. In value of supply, actually it is a small area, but definitely questions will be asked from this. Only one section, section 15. Section 15, subsection 1 says the value of supply is nothing but the transaction value. Transaction value means what? The price involved in the transaction, provided two conditions are satisfied. What are the two conditions? Price must be the sole consideration for sale, and supplier and recipient are not related. If these two conditions are satisfied, then transaction value will be taken as the assessable value. And to this transaction value, we have certain inclusions. What are they? As per 15(2)(a), all taxes, duties other than GST should be included in the value. Then, as per 15(2)(b), any amount that the supplier is liable to pay, means it is supplier's liability, which is incurred by the recipient on behalf of supplier, then it should be included in the value. Then as per 15(2)(c), any expenditure which is incurred by the supplier and recovered from the recipient should also be included in the value. Then 15(2)(d), interest, late fee or penalty for delay in receipt of consideration should be included in value. 4 inclusions. Then 5, that is subsidy. From whom? From other than CGST. First we need to check, is it directly linked to price or not directly linked to the price? If it is directly linked to the price, definitely from other than CGST, it should be included in the value. If it is not directly linked to the price, ignore it. What is the meaning of not directly linked to the price? The subsidy is no way connected to the outward supply. Subsidy is like a general subsidy for setting up a factory in backward region, for giving employment to underprivileged people, like that. Some reason we get the subsidy, that should be ignored. That is subsidy irrespective of outward supply, ignored and not considered as value, and it will be treated as donation. Now, in the given price, sometimes the price may be after considering subsidy or without considering subsidy. What is the meaning of after considering subsidy? If the given price, they are telling that net of subsidy after considering subsidy, means there is some original price. From that original price, whatever subsidy that is there in the question, they reduced and they gave the final price. Okay, means in the given price in the question, subsidy already reduced. Okay, then suppose if that line is not given, subsidy without consider, like price without considering subsidy, like that, which means they have not done any adjustment of the subsidy, that itself is the original price. The given price itself is the original price, they have not yet reduced the subsidy. Now you need to do the treatment. Then what if the question is silent? If the question is silent, consider the price as net of subsidy. Okay, so if the question is silent, consider the given price as after reducing the subsidy amount given in the question, that is original price minus subsidy in the question is the given price. Next, exclusion from the value of supply. So we have 3 exclusions. Now discount only, but the discount can be before or at the time of supply or after supply. If it is a pre-supply discount, it is always allowed as deduction if it is duly recorded in invoice. Example, trade discount. If it is a post-supply discount, that is also allowed as deduction, provided the terms are agreed before or at the time of supply. But for that, supplier should give a credit note and recipient should reverse the ITC. A credit note should be issued by the supplier and recipient should reverse the proportionate ITC. Suppose if the discount is given after supply and terms are not agreed before or at the time of supply, then it is not allowed as deduction, which means first I sold goods for 1 lakh to you. First I sold goods for 1 lakh to you, and thereafter I am giving you discount, but I have not agreed. I give you 50% discount. Even though I receive from you only 50, but I need to pay GST on 1 lakh because this is a post-supply discount and this discount is not agreed before at the time of supply, so it is not allowed as deduction. Not allowed as deduction, GST payable on value before discount. Then whether GST applicable on additional or penal interest on overdue loan. So simply remember, if there is a EMI, in the EMI, if the interest component is exempted, then on account of non-payment of EMI, there will be some penal interest that is also exempted. If in the EMI, the interest is taxable, then on account of non-payment of EMI, the penal interest is also taxable. Example, credit card interest is exempted or taxable, taxable. So whenever you swipe the credit card and convert into EMI, the interest involved in credit card will be taxable. In that EMI, interest is taxable. So if you are non-paying the EMI, the penal interest levied is also taxable. However, housing loan EMI, interest is exempted under interest on loans, advances, deposits. For non-repayment of housing loan EMI, if they charge any penal interest, that is exempted. So if the interest in EMI is exempted, penal interest also exempted. If the interest in EMI is taxable, penal interest is also taxable. Then, in case of hire purchase transaction, there will be interest that will be taxable. As hire purchase transaction interest is taxable, the penal interest is also taxable. But in hire purchase financing, in EMI, that interest will be exempted. So therefore, the penal interest is also exempted. That is this. Then what is the treatment of inclusions or exclusions in order to arrive at the value? Simple. First, as per provision, you need to check what we need to do. Whether an amount is to be included or not to be included, we need to see first as per provision. As per provision, an amount is to be included. Example, packing charges. Packing charges charged by supplier to recipient should be included in the value. And in the given price, it is already included. Then, therefore, ignore because already it is included. Any amount incurred by supplier and charged to recipient before or at the time of delivery of goods, it should be included in the value. Okay. Then, to be excluded. For example, discount is to be excluded. And in the given price, discount is already excluded, then ignore, don't do anything. Then to be included. Example, freight charges. Because I am collecting the freight charges because I am delivering the goods to the recipient's place. Freight charges to be included. And in the given price, it is not included. So we need to add. Then to be excluded. Subsidy from central government or state government is to be excluded. But the given price is without considering subsidy, means before subsidy. So we need to deduct. So that is this. Okay. Next. So whether no claim bonus given by insurance company to insured can be claimed as deduction while computing the value of supply. So generally, when insurance you have taken, general insurance you have taken, and you have not claimed anything, next year while renewal, you will get a no claim bonus. What is the treatment of that no claim bonus? Simple. It is like a pre-supply discount and it is allowed as a deduction. So next year, what will happen? Whatever is the total premium minus no claim bonus on remaining amount only GST payable, it shall be claimed as deduction from the value if the same is shown in invoice as per section 15 subsection 3, means pre-supply discount. Then incentive. Usually in case of RuPay transactions or UPI transactions, the acquiring bank will not charge any processing fees. For example, I'm a vendor and you are scanning the GPay and you are making the payment through UPI. Full amount will be credited to me. That processing fees will not be charged by the acquiring bank. Okay. So the HDFC, ICICI, like a lot of acquiring banks are there, but they will not charge any processing fee. Why? Because they get an incentive from government, Ministry of Information Technology and Electronics. What is the treatment of that incentive? That is treated like a subsidy and it will not be included in the value. It is considered in the nature of subsidy by central government and therefore not included in the value. Then next one, TCS. So whenever supplier is providing the sale of car, TCS under Income Tax Act, I am a dealer, car dealer. When I sell the car from you, I will collect 1% as TCS under Income Tax Act. This TCS should be included or not included. Generally, as per 15(2)(a), all taxes, duties and cess by whatever name called other than GST to be included. But this TCS is an interim levy not having the character of a tax. Reason being, this particular TCS is not your tax on income, is your tax on expenditure. So it is an interim levy. This is not your income tax. Just to find your source of income they are levying. So no need to include it in the value. So generally as per 15(2), any taxes, duties and cess shall be included in the value, but TCS is not includable in the value as it is an interim levy not having the character of tax. Then What is the value to be adopted for computing GST on service of business facilitator or a business correspondent to a banking company? So what happens? Banking company will appoint a business facilitator or business correspondent as the agent to provide the services to the customers on behalf of the bank. Now, this banking company which appointed these two people, they will provide the service to customer on behalf of bank, and they receive the service charges, they remit that service charges. On these service charges, who will pay GST? Bank only will pay GST, that is included in the value of supply of bank. However, this business correspondent and facilitator will get a commission that is only included in the value of supply of the business facilitator or correspondent, and accordingly they will pay GST. If it is business facilitator to banking company, it is covered under RCM, but business correspondent to banking company is not covered under RCM. So in case of business correspondent, GST payable under FCM on the commission. In case of business facilitator, GST payable under RCM by banking company. Remember, if they are working in rural area, then the commission will be exempted, because business facilitator, business correspondent earning commission in rural area is exempted. But the agent of business correspondent is there in RCM, not business correspondent. The agent of business correspondent is in RCM. Yes. So that is about this value of supply. Now we have some small areas left and one big area, that is input tax credit. Meanwhile, we have any doubts? Yes. Sir, we will go slow, sir. We announced this as crash batch. Students felt it's little fast and many students left. Okay. So this is crash batch means I have to go fast only, no? Fine. No issue, because no. If anyone is writing for May, please don't listen to these lectures. Seriously. Because there are around 40 amendments which are applicable for your May 25 exam. None of this discussion, you will definitely get confused. So if you are appearing for May 25, யாராவது May 25 appear பண்றவங்க இருந்தா தயவு செஞ்சு எதுவுமே பார்க்காதீங்க. Anyhow, I will take another batch, because there are a lot of amendments. Now what will happen? இது கத்துக்கிட்டு அந்த amendment புரியாம கண்டிப்பா confuse ஆயிடுவீங்க. So don't listen to the any person. So this is purely for Jan 25. Now May 25 எக்கச்சக்க amendments இருக்கு because of the Finance Act, new Finance Act, and lot of circulars, lot of clarifications, exemptions and all completely revamped. Okay, so for that reason. Next, so I think May 25 I can't do a justice, but Jan 25 we will do some questions. Maybe as we completed up to this, we will see some questions also. Maybe you will get a confidence. Okay, just give me 5 minutes. I'll speak to the concerned person and I'll get back. Okay.
अरे मोनिश भाई ईरन भाई भाई யாரா போட்டது ஓகே சார் யார் அது போட்டது ஐயோ தெரியாம போச்சுடா நியூ மெசேஜ் மேலப்போ இதுதான் நியூ மெசேஜ் ஓல்ட் மெசேஜ்
Okay. So there is one query. I have a doubt. Service provided by government. Please explain. I explained, no. All the services provided by government. We covered. Already we covered that. Done. So what I'll do, I spoke to your concerned person. So students were telling to solve more questions. We'll do one thing. Up to this segment 6, we'll stop for today. Segment number 7 onwards, we will discuss in tomorrow's class. No issue. So now up to segment 6, we will do some problems and solutions so that it will be like, coverage, application of whatever we have read so far. So up to 6, this 7 onwards, the 7, 8, 9, 10, 11, 12, 13, 14, these are all small topics that we can see in tomorrow's class also. Okay. So today, in rest of the time, what we will do, we will spend time on discussing some problems and solutions. So which book you have? Can I do it from study material? Is it okay for you? Study material I will do. Is that fine? Okay. So we saw few questions, few areas today. We will see some questions. So I wanted to discuss from exemptions, because just now we completed the exemptions. From that we will see. Yes. See this test your knowledge questions. I'll explain this. Other than study material, if it is some important past year paper also fine. We'll do. So first one, exempt supply means supply of goods or service or both which attracts nil rate of tax, which may be wholly exempt from tax, but excludes non-taxable supply. Discuss the validity of the statement. The statement is not valid. Why? Because exempted supply means three things will come: notified as exempted, nil rated, non-taxable. Non-taxable also part of exempted supply. So what is the meaning of non-taxable? That is alcoholic liquor for human consumption and petroleum products. They are non-taxable. Non-taxable also will be part of exempted supply. So three things will come under exempted supply: notified as exempted, nil rated, and non-taxable. Then, so therefore this statement is not valid. Service provided by an entity registered under 12AB of Income Tax Act 1961 are exempt from GST if such services are provided by way of charitable activities. Elaborate the term charitable activities. So what are all coming under charitable activities? We discussed. So total 4 activities. Number 1, public health. Number 2, advancement of religion, spirituality, yoga. Number 3, educational programs to orphans or mentally, physically, disabled persons, prisoners, or persons over 65 years residing in rural area. Then number 4, environmental preservation. Okay, these are the 4 charitable activities that we need to write. That is the answer for this. Then examine which of the following independent services are exempt from GST. Food supplied by the canteen run by a hospital to inpatients as advised by the doctors. What is your answer? Is it taxable or exempted? Is it taxable or exempted? Food supplied by canteen run by a hospital to inpatients as advised by the doctors. exempted. Why is it exempted? Because any food supplied to the inpatients is part of healthcare services. What if it is supplied to outpatients, visitors, or attendants, etc.? That will be taxable. Outpatient means those who come for consulting. Inpatient means those who are admitted in the hospital. So those who are admitted in the hospital is inpatients. Definitely it will be exempted. Then a resident welfare association in a housing society registered under GST collects the maintenance charges of 6,500 per month per member. Is it taxable or exempted? 6,500 exempted. Why it is exempted 6,500? Because it does not exceed 7,500 per month per member. Now, sir, how to write the answer when we get a question like this? First, you need to give the reference. So 4 points ensure that you are presenting in your answer. First, you need to write as per section 11 of CGST Act, read with. So because all exemptions will be in section 11. As per section 11 of CGST Act, read with notification 12 of 2017. Two notifications you remember. Section 11 read with notification 12 of 2017, that is for exemptions. But whenever you are writing about RCM, section 9 subsection 3 read with notification 13 of 2017. Okay, 12 of 2017 is for exemptions, 13 of 2017 is for RCM. And section 11 is for exemptions, section 9 subsection 3 is for RCM. Okay. Now, for this A point, you should write as per section 11, read with notification 12 of 2017. So, any service, that is healthcare service provided by a clinical establishment, authorized medical practitioner, paramedics is exempted. Therefore, food supplied to inpatient is part of healthcare service and it is exempted. First reference, then provision, then discussion, finally conclusion. Then second also will write as per section 11, read with notification 12 of 2017, services provided by resident welfare association to its members is exempted if the maintenance charges per month per member does not exceed 7,500. Provision. In the present case, as the maintenance charges is 6,500, which does not exceed 7,500, therefore it is exempted. Like that we need to write. Okay. Next, look into fourth one. An individual acts as a referee in a football match organized by Sports Authority of India. He also acted as a referee in another charity football match organized by a local sports club. In lieu of lump sum payment, discuss whether any GST is payable on the activities undertaken by him. There are two supplies. One, he is acting as a referee in football match organized by Sports Authority. What is the answer for that? First one, what is the answer? And second one is, if they are acting as a referee in a charity football match organized by local sports club. So what is your answer? First case, it is first case exempted. Why first case it is exempted? So because services provided by individual as a player, referee, umpire, coach, team manager to recognize sports body. So Sports Authority of India will come under National Sports Federation. So due to that reason, this acting as a referee in football match, referee will be exempted. Whereas second, if they provide service to recognize sports body only, it will be exempted. But in this case, they are providing services to a local sports club. Therefore, it will be taxable. Okay. Next, number 5. So again, explanation same. First, you need to write as per section 11, read with notification 12 of 2017, services provided by individual as a player, referee, umpire, coach, team manager to a recognized sports body is exempted. In the present case, Sports Authority of India is a recognized sports body, hence acting as referee is exempted. However, that local sports club is not a recognized sports body and acting as a referee to that sports club will be taxable like that. Next, look into number 5. RXL Private Limited manufactures a beauty soap with the brand name Forever Young. RXL Private Limited has organized a concert to promote its brand. Miss Ahana Kapoor, its brand ambassador, who is a leading film actress, has given a classical dance performance in the said concert as a part of her services as a brand ambassador of the company. Remember, generally performance artists providing services in classical or folk art form of music, dance, theater is exempted if the consideration does not exceed 1,50,000. However, if they are acting as a brand ambassador, that exemption is not applicable, which means it will be taxable. In this case, even though the consideration does not exceed 1,50,000, but she is acting as a brand ambassador, therefore it will be taxable. Okay. Exemption will not be applicable. Yes, she is required to pay GST in this case. Next, number 6. Examine whether GST is exempted on the following independent supplies of services. Service provided by a private transport operator to Scholar Boys Higher Secondary School. Okay. Private transport operator. It is to education institution or by education institution. It is to education institution. For to education institution, transportation, security and housekeeping within the premises, catering. To category 1 is only exempted. What is category 1? School up to 12th standard. So Scholar Boys Higher Secondary School by way of transportation of students to and from the school is taxable or exempted? Exempted. Very good. It will be exempted because it is to school. Then service provided by way of vehicle parking to general public in a shopping mall. Anywhere in our exemptions we have come across vehicle parking services in shopping mall is exempted? No. So when you don't know or when you have not read anything, definitely it will be taxable because the balancing figure is taxable. When you read itself, you will be able to identify, okay, we listened to this, exempted. No, we did not listen. We don't know what it is. Taxable, as simple as that. Okay. Next. A state transport undertaking has hired motor vehicles meant to carry 8 to 10 passengers from Fast Cab Renting, a motor vehicle renting company. Give your comments as to whether any GST is payable in this case. So, what is your answer for this? Point number 7, taxable or exempted? Point number 7, question number 7. Taxable as seating capacity not exceeding 12. Very good. So, a hiring of motor vehicle that can carry more than 12 passengers, to a state road transport undertaking is exempted. But in the present case, it is to carry 8 to 10 passengers, not more than 12 passengers. Even though it is given on rent to a state road transport undertaking, it will be taxable. Okay, very good. Next, not up to 12, dear, it is more than 12. Capacity more than 12 passengers. And while discussing passengers, whether it is including driver seat or excluding driver seat, excluding driver seat, more than 12 passengers, excluding driver seat. The moment you see passengers, it will be excluding driver seat. Then next, Indiana Engineering College, an education institution, has conducted an entrance test examination for various courses run by it. For obtaining qualification recognized by law for the time being in force and charged entrance fee from applicants. Determine whether Indiana Engineering College is liable to pay GST on the same. Answer. What is your answer for this? 8th one. Exempted. Why it is exempted? Services provided by an education institution by way of conducting entrance exam against an entrance exam fee is exempted. Is it an educational institution? Yes. They are collecting the entrance exam fee. Definitely it will be exempted. Even though they are not collecting, they are not giving admissions now, just an entrance exam. Even then, separately we have an exemption for this. So it is exempted. So eighth one will be exempted. Next, 9. Bablu Transporters, a goods transport agency, transported relief materials in a goods carriage meant for victims of Kerala floods, a natural disaster by road from Delhi to Ernakulam for a company. Bablu Transporters is of the view that it is not liable to pay GST on the said service provided as said service are exempt. You are required to advise it on the said issue. So what is your answer? Exempted. Why? Is it covered under the specified goods? Yes. Relief material for natural or man-made disaster is a specified goods. So due to that reason, service provided by GTA by way of transporting the specified goods is exempted. Then number 10, KN Enterprises, an event organizer, provided service to Breathing Wall Limited by way of organizing business exhibition in New Delhi as a part of Make in India initiative. KN Enterprises claims that it is not required to pay GST as the service provided by way of organizing business exhibition are exempt from GST. Examine the technical veracity of the claim of KN Enterprises in the given case. So what will be the answer for this? They are event organizer. They provided service to Breathing Wall by way of organizing business exhibition. So what is your answer? Taxable or exempted? Very good. Taxable. Why? Because the business exhibition is conducted in India. We have learned the exemption. Services by way of conducting business exhibition outside India, then only it is exempted. If the business exhibition is conducted in India, then it will be taxable. Next, ST Limited has given on hire 5 trucks to T2 Transporters of Delhi, a goods transport agency, for transporting goods in Central and West Delhi. The hiring charges for the trucks are 7,500 per truck per day. Examine whether GST is payable in the given case. What is your answer? Taxable or exempted? Exempt. Why? 7,500 is for Resident Welfare Association. This is GTA. No. See, try to understand what is the question. They have given on hire 5 trucks to GTA. In renting of motor vehicles, we discussed 4 exemptions. Hiring of motor vehicle that can carry more than 12 passengers to a state road transport undertaking, 1 point. Hiring of electric vehicle that can carry more than 12 passengers to a local authority, another point. Hiring of motor vehicle that can carry goods to a GTA, goods transport agency, that is there. So I have a motor vehicle which can carry goods that I am giving on rent to a goods transport agency. Due to that reason, it will be coming under exemption. Okay. So that is this. So these are some questions. Then next, you can see on supply under GST. So in this, we have so this is related to supply, whether it will be supply or not a supply. Meghraj and Company wishes to commence the business of supplying ready-made garments within Punjab and in the neighboring states of Delhi and Haryana. Kindly state as to what is the taxable event under GST, and leviability of CGST, SGST or UTGST and IGST are the same. So whether it is intra or inter depends. If they are making supply within Punjab, it is intra-state chargeable to CGST, SGST. If they are making supplies in neighboring states, then it is interstate supply chargeable to IGST. Because intra means location of supplier, place of supply, same state. Inter means location of supplier, place of supply, two different states, two different union territories, a state and a union territory. Then next, number 2. Damodar Private Limited, registered in Delhi, is planning to transfer some goods to its branch registered in West Bengal without any consideration, so that the goods can be sold from that branch. The company believes that the transaction that will be undertaken by it would not qualify as supply, as no consideration is involved. Ascertain whether the transfer of goods by Damodar Private Limited to its branch office would qualify as supply. Is it supply or not a supply in this case? Answer: it is supply. Okay. So 71C, why? Registered in Delhi, branch in West Bengal are distinct persons. So when they are having business in two separate states, they are called as distinct persons. So transaction between distinct persons, even though without consideration, in the course or furtherance of business, constitute supply under 71C. It will come under distinct persons. Okay. Next, 3rd, Prithvi Associates is engaged in supply of taxable goods. It inquires from its tax advisor as to whether any activity can be treated as supply, even if made without consideration in accordance with the provisions of GST law. You are required to enumerate such activities. What answer you will write for this? 71C, DIP. That is the answer. See, you should know what answer to write for which question. They are telling, even if it is made without consideration, the moment you see this word, even if it is made without consideration, no doubt, 71C, you need to write about those 4 points, DRIP. And in exam, don't use the mnemonics. Don't use the mnemonics while writing the answer. You keep in mind, but while writing, you write 1, 2, 3, 4 like that. Then, number 4, composite supply is treated as supply of that particular goods or services which attracts highest rate of tax. For the purpose of considering tax liability, examine the validity of this statement. So, composite supply is treated as supply that attracts highest rate of tax. False. Composite supply is a supply based on principal supply. For mixed supply, only highest rate. For composite supply, we need to take the rate of principal supply. For mixed supply, only it is highest rate. So, this is not a correct statement. Transfer of title under or possession is necessary for a transaction to constitute supply of goods. So transfer of title is sufficient. Possession, like transfer of title, may be at present or may be at future date. So that will come under supply of goods. That's what you need to write. Either the transfer of title may be at present or the transfer of title may be at a future date. And the reference that you need to give is 71A, read with schedule 2. Then examine whether the following activities would amount to supply under section 7, read with schedule 1. A. Suleka manufacturers have a factory in Delhi and a depot in Mumbai. Both these establishments are registered in respective states. They are registered in respective states. Finished goods are sent from the factory in Delhi to the Mumbai depot without consideration, so that the same can be sold from the depot. Now, is it supply or not a supply? Just supply or not a supply? Supply. Very good. Why? Again, factory in Delhi and Mumbai and depot are distinct persons, two states, distinct persons. Transaction between distinct persons, even though without consideration in the course or furtherance of business, is supply. B. Raman is an architect in Chennai. His brother, who is settled in London, is a well-known lawyer. Raman has taken legal advice from him free of cost with regard to family dispute. Actually, it is not a supply. But tell me why it is not a supply. Tell me why it is not a supply. B. Why it is not a supply? Not a supply means not related. Not in the course or furtherance of business is actually wrong. First of all, that brother is settled in London. In case of family definition, spouse and children, whether or not dependent, but brothers, sisters, parents, grandparents should be wholly and mainly dependent on that person. As brother is settled in London, not dependent on Mr. Raman, so not a related person. Because if you write not in the course or furtherance of business, then you are telling that if it becomes in the course or furtherance of business, it is supply. So even if it is in the course or furtherance of business, it is not a supply because first of all, it is not from a related person. Next. Would your answer be different in the above case if Raman has taken advice in respect of his business unit? So the answer will remain the same, because even if it is for business purpose or if it is for family dispute, first of all, it is not import of service from a related person. Okay. Next. State whether the following supplies would be treated as supply of goods or supply of service as per schedule 2. Renting of immobile property, where it will come supply of service. Reason is important. It is supply of service. Why? Because there is a transfer of right to use immobile property. You have to write that. Transfer of right to use immobile property. So it is supply of service. Goods forming part of business asset are transferred or disposed of by or under directions of person carrying on the business so as no longer to form part of those assets. Transfer of business assets. Definitely transfer of business asset means what? Title is given. So as title is given, it will be coming under supply of goods because transfer of title is supply of goods. Transfer of right in goods without transfer of title in goods, where it will come? Supply of service. I am just giving the title, but I am not giving the right in the goods. So therefore, it will be coming under supply of service. Okay. Transfer of right in goods, not title. Okay. Next. D. Transfer of title in goods and an agreement which stipulates that property shall pass at a future date upon payment of full consideration as agreed, like a hire purchase transaction. So what is your answer? Is it supply of goods or supply of service? Supply of goods. Very good. Why it is supply of goods? Because the title may be passed at present or the title may be passed at a future date. So it will be coming under supply of goods only. Then next, 8. Determine whether the following supplies would be treated as supply of goods or supply of service as per schedule 2. Temporary transfer or permitting use or enjoyment of intellectual property right. Temporary transfer service. If it is a permanent transfer, then only it will be goods. Okay, temporary transfer is service. Then any treatment or process which is applied on another person's goods. I gave example. You gave me cloth on which I am doing the process. So it is coming under supply of service. Transfer of title in goods. No doubt it will be coming under supply of goods. Then the goods supplied on hire purchase basis will be treated as supply of services. Examine the validity of the statement. Wrong. Hire purchase, what happens is that today the possession will be given, whereas the title will be transferred at a future date. So hire purchase transaction is supply of goods only, not supply of service, because the title shall pass at a future date. Still it is supply of goods. Then 10th one, examine whether the activity of import of service in the following independent cases would amount to supply under section 7. Miss Srinidhi Kaushik received interior decoration services for her residence located at Bandra, Mumbai from Mr. Rachel of Sydney, Australia. The amount paid for the said service is 5,000 Australian dollars. What is your answer? Is it supply or not a supply? I want 71B or 71C. 71B or 71C? Seven B, good. So it will be coming under 71B because import of services for a consideration. But it is not in the course or furtherance of business. It's okay. Even though it is not in the course or furtherance of business, it will be coming under 71B because for personal purpose. The moment it is 71B, don't see what purpose. Then number 2, Miss Srinidhi Kaushik received interior decoration service for a residence located at Bandra, Mumbai from her brother, Mr. Varun, residing in Sydney, wholly dependent on Miss Srinidhi. Further, Miss Srinidhi did not pay any consideration for the said service. Now, 71B or 71C or not a supply? Not a supply. Not a supply means why 71C? Not a supply. Okay. Why not a supply? Related. Related. It is related. Actually, brother is dependent, related, but not in the course or furtherance of business. That's why it is not a supply. Okay. It is personal activity. First, related. Second, it should be in the course or furtherance of business. Here, it is not in the course or furtherance of business. That's why it is not a supply. The next. Third, will your answer change in the above case if Srinidhi has taken interior decoration service with regard to her business premise and not her residence? Yes. So, first it is from a related person and it is in the course or furtherance of business. Therefore, it will become supply under 71C. And there is no consideration. That's why we are applying 71C. If there is a consideration, we would have applied 71B. Then 11. Dum Dum Electronics has sold the following electronic items to Akbar Retail Store. They sold these items and they issued a single invoice indicating price of each of the above items separately. Now, tell me whether it is composite supply or mixed supply or it will be individual supplies. Yes. So it is someone started a whiteboard. So it is composite supply or mixed supply or individual supplies. It will be individual supplies. Very good. Why it is not composite supply? Because it is not naturally bundled. How can you say refrigerator and air conditioner is naturally bundled? One can be supplied without the other also. So it is not naturally bundled. And it's not for a single price. Single invoice is there, but not for a single price. So that's why it is not even mixed supply. Then it will be coming under individual supplies, where respective supply will be taken for the respective rate will be taken for respective supply. Even though there is a single check of 1 lakh, that is irrelevant. Single check of 1 lakh is also irrelevant in this case. Then 12. Manikaran, a registered supplier of Delhi, has supplied 20,000 packages at rupees 30 each to Mukija gift shop in Punjab. Each package consists of 2 chocolates, 2 fruit juice bottles, and a packet of toy balloons. Determine the rates of GST applicable in the given case, assuming the rate of GST to be as under. Chocolates 18, fruit juice bottles 12, and toy balloons 5%. What should be taken in this case? Composite or mixed or individual? Mixed, because these 3 are not naturally bundled and it is for a single price. So it is not a composite supply and for a single price. So it will be mixed supply. So we need to take the highest rate. What is the highest rate? 18%, and we need to apply, which means the answer is 20,000 into 30 into 18% will be taken as the answer. Next. Number 13, Gagan Engineering Private Limited, registered in Haryana, is engaged in providing maintenance and repair service for heavy steel machinery. For carrying out the repair work, Gagan Engineering sends its container truck equipped with items like repair equipments, consumables, tools, parts, etc. from Haryana workshop to its own repairing centers located in other states across India where clients' machinery are being brought and are being repaired. So they are sending from where to where? From registered in Haryana. They're sending the container trucks from Haryana to its own repairing centers located in other states. Okay. Discuss the leviability of GST on interstate movement of trucks. Whether GST payable on movement of trucks or not payable on movement of trucks. GST payable or not payable? Not payable. Because there is a circular that we have seen. Movement of conveyances between the distinct person. Movement of conveyance between the distinct person. So on conveyance, GST not payable. Okay. So therefore, in this case, on conveyance, GST not payable, and that circular reference you need to give. That is, you need to write as per CBIC circular, movement of conveyances carrying goods or people or for repairs between the distinct persons do not constitute supply. Therefore, in the present case, Gagan Engineering Private Limited, which is sending the truck from Haryana to its own location at that state, even though between distinct persons, but applying the circular, it is not a supply, and consequently GST not payable on interstate movement of trucks. Like that, we should develop the answer. Then, next one, Sarvana and Sons wishes to start supplying alcoholic liquor for human consumption in the state of Tamil Nadu. Therefore, it applies for license to the Tamil Nadu government for selling liquor for which state government has charged specified fee from it. Examine whether the grant of alcoholic liquor license by Tamil Nadu government to Sarvana and Sons qualify as supply. Actually, it will not become supply, not a supply, because Schedule 3, liquor license granted by state government. So state government giving liquor license against a license fee is excluded from supply. What if it is not government, that is Sarvana and Sons got the license, they transfer the license to some other person, then that will be covered under supply and chargeable to GST. Okay. So what is the explanation that we will write for this? As per section 7, subsection 2, read with schedule 3 of CGST Act, grant of liquor license by state government is excluded from supply. In the present case, state government of Tamil Nadu giving liquor license to Sarvana and Sons against a license fee is not a supply, and consequently GST not payable. Okay. So that's how we need to write the answer for this. Okay. Then we'll take a break and we will continue at 2 o'clock. Okay. And 2 to 4, actually I am taking class till 4 only. 2 to 4, what we will do, we will discuss the question and answers for the remaining chapters which I have covered today. So see, first of all, I am not aware that, with what objective you came for this 2 days. If at all you are thinking that in 2 days, I need to cover everything, that too so slowly, things will not happen like that, boss. In 2 days, if everyone can learn CA intermediate and go for exam, then it is not called a CA course, it is called a some other course. Okay. So practically 2 days, no one can teach entire subject, that too so slowly. So the message what I got from your CCASA team is that, sir, students are appearing for JAN exam. They want a 2 days crash batch. You know what is the meaning of crash batch? Crash means everything will be crashed and in a fast manner it will be taken. That is the meaning of crash batch. Okay. So therefore, I thought as you completed the discussion, like learning, so therefore I need to do the revision. That's what I thought. I never knew you have not at all studied, and these 2 days only you are thinking to study and clear CA intermediate. Wow, I don't know how it will be possible like that and all. And therefore, that's why I started discussing like in a complete manner flow. I thought you have already learned. So I did the discussion. They should have conveyed important topics. You take slowly, sir, like that. I would have taught that way. Okay. Now that I understood what I need to do, fine, not an issue. So today we discussed a few chapters. So this up to the sixth chapter we completed, and exemptions and supply visa. Thereafter we will take, like, we will see value of supply and RCM, etc. Also some questions, and even so we will try to cover tomorrow important topic, input tax credit, and some important chapters I said na, category A chapters. So today majorly category A chapters, which I said 3 chapters I completed, only ITZ is left. That ITZ, composition scheme, and some other things, and RTP discussion I will do tomorrow. Okay, so that this is what I can do. If you want me to go slowly, fine. Thank you. We'll meet at 2 o'clock. Okay. See the next chapter, that is charge under GST, that is RCM. And in this, we have some questions related to composition scheme as well. So we'll discuss composition scheme concept. So in a summary form, and then we will move on to the charge chapter, because we have some questions on composition scheme as well in that, for that reason. So see this. Segment 18, composition scheme. You can see the PDF that you have. So composition scheme is a simplified scheme for payment of GST. Rather than paying GST at the regular rates, a person who is opting for composition scheme will be paying GST at reduced rates. And there are two disadvantages for opting for composition scheme. Disadvantage number one is that whatever reduced rates that we pay as GST, that cannot be recovered from the recipient. So which means that we need to pay out of our profit, so our profit will get affected. Number two is that we cannot avail the ITC on our inward supplies when we are under composition scheme. These are the two disadvantages. But advantages wise, if you see, so because we are not charging any GST to the customer, the cost to consumer will be reduced. So which means rather than purchasing from a regular scheme person, the buyer will prefer to purchase from a person who is opting for composition scheme. Also, there is because of which the sales volume will increase. When the sales volume will increases, the total profit will increase. Another advantage is with respect to reduction in compliance cost. Like compared to normal scheme, under composition scheme, we don't have to file monthly returns, we have to file quarterly returns, and even taxes we need to pay on a quarterly basis. And only one return we need to file. Unlike GSTR1 and GSTR3B, a person who is under composition scheme is required to file only one return, that is CMP8, and one annual return needs to be filed. So therefore, comparatively, the compliance is very less. Even not much accounts and records are required to be maintained by a person who is under composition scheme. So these are the advantages. Finally, so they need to weigh between the advantages and disadvantages and decide, is it beneficial to opt for composition scheme? But the deciding factor there is the sales volume or the total profit. Okay. Now there are two types of composition scheme, that is under 10.1 and 10.2a. 10.1 composition scheme is applicable to manufacturer, trader, and supply of food service provider, whereas 10.2a composition scheme is applicable for manufacturer, trader, and any service provider. They can be into any services, they can go for this composition scheme. So you can see that there are two composition schemes, 10.1 and 10.2a. 10.1 composition scheme is applicable to manufacturer, trader, and supply of food service provider, whereas 10.2a composition scheme is manufacturer, trader, and any service provider. Under 10.1 composition scheme, if their turnover, like say for example, I am manufacturer or a trader or a supplier of food service provider, but I want to provide some other services also. But under 10.1, literally not possible. So, but there is a limit which is given, wherein I can provide any other service, provided I should provide only to the extent of 10% of turnover during previous year or 5 lakhs, whichever is higher. So, however, they can provide any services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. But this condition or restriction is not there for 10.2a, because for 10.2a, any service provider can go for composition scheme. Now, what is the eligibility to opt for composition scheme? 10.1 composition scheme, your aggregate turnover, that is this manufacturer, trader, or supplier food service providers aggregate turnover during the previous year should not exceed 1.5 crores. And in case of 8 states, it will be 75 lakhs. What are those 8 states? MMTN, USAM. So northeastern states are MMTN, ASAM: Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim. Then we have Arunachal Pradesh and Meghalaya. Whereas in case of these 8 states, it is MMTN, USAM: Manipur, Mizoram, Tripura, Nagaland, U for Uttarakhand, and yes for Sikkim, Arunachal Pradesh, and Meghalaya. You can see here MMTN, USAM. For these 8 states, the limit will be 75 lakhs. Otherwise, 1.5 crores. And What is the benefit of reduced rates in case of 10-1? So if you are a manufacturer, you need to pay 1%, that is 0.5% CGST, 0.5% SGST on total turnover. Whereas trader, again 1% only, that is 0.5% CGST, 0.5% SGST on taxable turnover, not on total turnover. Being a trader, it is on taxable turnover. Then the supply of food service provider, 2.5, 2.5, that is 5%, CGST 2.5%, SGST 2.5%, again on total turnover. What about any other services? This any other services up to 10% limit is there na? For that also the rate applicable to trader. That is for any other service provider up to limit allowed also 1% on taxable turnover. That should be taken. Whereas current year limit for reduced rates, that is, okay, previous year your turnover does not exceed that 1.5 crores or 75 lakhs. So current year you opted for composition scheme. Composition scheme is optional, not mandatory. You opted during the current year. And current year, up to what limit you will be in composition scheme? Up to that limit of 1.5 crores and 75 lakhs. You will be under composition scheme. Once you cross that limit, you will be going into normal scheme. And next, 10-2A, if you see, composition scheme under 10-2A is applicable for manufacturer, trader, or any service provider, and their turnover during the previous year should not exceed 50 lakhs. And what is the rate? 6%, that is 3% CGST and 3% SGST on total turnover. From this, it is clear that being a manufacturer, it is advisable to go for 10-1 only, being a manufacturer or a trader or supplier food service provider, because the limit is also high in 10-1 and the rate is also less. Whereas in 10-2A, the limit is less and the rate is also high, which means when is it advisable to opt for 10-2A? If I am providing any service other than supply of food. My business itself is service provider other than supply of food. I can come into 10-2A like coaching centers, beauty parlors, or repair centers. They can come into 10-2A. Or I am a trader, manufacturer, or supply of food service provider, and I want to provide any other service beyond 10% limit. Because if you are here, you can provide only up to 10% or 5 lakhs, whichever is higher. So if you want to provide more than that limit, then you need to shift it to 10-2A. So only for these two people, it is advisable to go for 10-2A. Then what is the current year limit for reduced rates? 50 lakhs. Then certain people, even though all these conditions are satisfied, cannot opt for composition scheme, that is S9 RCM. What is this S9 RCM? You can see here, when composition scheme under 10-1 is not applicable. In case of S9 RCM, section 9 is RCM. You remember that way. S for service providers other than supply of food or beyond 10% limit. N for non-resident taxable person, that is a person who come from outside India to India and is not having any physical place of business in India. I for interstate supply of goods or services, person who is making interstate supply of goods or services cannot opt for composition scheme. And N for non-taxable supplies, that is alcoholic liquor for human consumption or petroleum products. E for supplier of goods, supplier of services through e-commerce operator, not goods. Previously supplier of goods or services, but now only supplier of services through e-commerce operator. Then RCM under section 9 subsection 4. So that is when 9 subsection 4, a promoter or builder who is making purchase from an unregistered person, definitely they cannot go for composition scheme. Those suppliers cannot go for composition scheme. Then C for casual taxable person, and M for manufacture of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. They cannot opt for composition scheme. Okay. So these are the cases where a person cannot opt for composition scheme. And whether these limits are for the current year or these limits are for the previous year. So all these things, that is these restrictions, we need to see for the current year. Okay. These we need to see for the current year. This is not for the previous year. All these restrictions is for the current year. Then, so therefore, 10 subsection 1, S9 RCM, whereas 10-2A, 9 RCM is the restrictions. Why? Because they can provide any service other than supply of food or supply of food, everything can be provided. That's why that S point is not there. So S9 RCM, here 9 RCM. What are those notified goods? If they manufacture, they cannot opt for composition scheme. Ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. Okay, but a trader of these goods can opt for composition scheme. Then next, what is the meaning of aggregate turnover? Why aggregate turnover is relevant? Aggregate turnover is relevant because during the previous year, if my aggregate turnover does not exceed 1.5 lakhs or 75 lakhs or 50 lakhs, I can opt for composition scheme. So what is that aggregate turnover? General aggregate turnover includes taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, computed on all India basis, and it excludes inward supply under RCM and taxes. But aggregate turnover for this purpose also same meaning of aggregate turnover, except that interest on loans, advances, deposits will not be taken in aggregate turnover, and pre-registration turnover is included in aggregate turnover. Okay, so aggregate turnover will be computed on the basis of turnover on all India basis, and it will include value of all taxable supplies, exempt supplies, and exports made by all persons with same permanent account number, but would exclude inward supplies under reverse charge as well as GST group. Okay, and interest income will not be considered for calculating aggregate turnover as well as turnover in a state or union territory. Now, we need to understand that there are three turnovers in the composition scheme. You can see meaning of various turnovers. This table is very, very important for us for application purpose. In entire composition scheme, we come across three turnovers. One is aggregate turnover for computing the eligibility to opt for composition scheme. Another one is turnover during the previous year for computing 10% limit, because we can provide service up to 10% of turnover during the previous year, or 5 lakhs, whichever is higher, and turnover for payment of GST under composition scheme. So these are the three turnovers. First, aggregate turnover definition we learned. So taxable supplies will come, exempted supplies will come, then non-taxable supplies will come, zero rated supplies also will come, and inward supplies under RCM will not be taken, taxes will not be taken. This is the regular meaning of aggregate turnover. Plus, in addition, interest on loans, advances, deposits will not be taken, and pre-registration turnover will be included. So these are the points you need to remember for meaning of aggregate turnover for determining the eligibility to opt for composition scheme, and it should be computed on all India basis, and we need to see this for the previous year. Then what is the difference between this aggregate turnover for determining eligibility versus the turnover for determining 10% limit? Same, ditto, everything same, except that this aggregate turnover is computed on all India basis, whereas this turnover is computed state or union territory wise. Here it is computed all India, here it is computed state or union territory wise. But otherwise, all the points are same. Then, what is the difference between turnover for determining 10% limit versus turnover for payment of GST? We need to take current year turnover for payment of GST. We will not see previous year turnover. And here, you should not have non-taxable supplies. Why? S9 RCM. If you have non-taxable supplies, you are disqualified. You should not have interstate supplies. If you have interstate supplies also, you are disqualified from composition scheme. Then the pre-registration turnover is excluded. Otherwise, whatever is the turnover for 10% limit, the same will be taken even for payment of GST under composition scheme. So this meaning of turnovers is required. Not applicable means what? Not applicable means these supplies cannot be made during the current year, and if made, the person is disqualified from the composition scheme. Pre-registration turnover means the turnover before you are getting registered. Then next, you can see here, person opting for composition scheme can provide service up to 10% of turnover. So 10% or 5 lakhs, whichever is higher. Why 5 lakhs? Because previous year only you started, current year only you started business, previous year is 0. 0 into 10%, 0 or 5 lakhs, whichever is higher, 5 lakhs. And the tax rate applicable for this service is 1% of taxable turnover, that is 0.5% CGST, 0.5% SGST on taxable turnover. Then there are some other procedural provisions. How to opt for composition scheme? We need to opt for composition scheme by making an application in CMP2. CMP2 is the form for entry into composition scheme, and when it should be filed before commencement of the relevant financial year. For example, during the year, can I go for composition scheme? No. Right now, I am in 2024-25. I cannot go for composition scheme. I need to wait till March, and only in the March I can go for composition scheme, that too for financial year 25-26. And suppose if I am not already registered, now only I am getting registered, anytime I can go into composition scheme. by making application for registration. And a person who is under composition scheme should display that they are under composition scheme in the sign board, notice board, and in every invoice or bill of supply that they will give. Remember, a person who is under composition scheme cannot recover GST. So the type of document is not tax invoice. It will be bill of supply. And they need to file a quarterly return. That quarterly return will be CMP 8 by 18th of the month following every quarter. And even they need to pay tax on a quarterly basis. Then, so GST, they need to pay on advances because the time of supply in case of person opting for composition scheme is due date of invoice, actual date of invoice, or date of payment. Means they need to make adjustment for advances. First, they need to see what is the bills raised during the quarter, and any advance received during the quarter for which supplies will be made in future, then also we need to pay tax on that. So first, bills raised during the quarter, add advances received during the current quarter pertaining to next quarter, minus advances which is already received for the last quarter, you would have taxed it, but for which the invoices or bills will be raised now, so that should be taken out, minus advances received during the previous quarter which is pertaining to the current quarter, we should be adjusting. On this only we need to compute GST under composition scheme, and they need to file annual return by GST in GSTR4 by 30th April of the succeeding financial year. Then next one, validity of composition scheme. If all the conditions are satisfied, the composition scheme remain valid. Suppose if the conditions are not satisfied, you need to pay tax as a normal taxpayer and issue tax invoice for taxable supply, because the moment conditions are not satisfied, you will come out of the composition scheme. When you come out of the composition scheme, you need to pay tax as a normal taxpayer, issue tax invoice for taxable supply. And what is the time limit within which you need to come out of the composition scheme? Within 7 days, you need to come out of the composition scheme by filing CMP4 as intimation. So entry will be CMP2, exit will be CMP4. Or voluntarily also at any time you can come out of the composition scheme by filing CMP4. And suppose you breach the condition and you are continuing in the composition scheme, and proper officer has reasons to believe that a taxpayer is not eligible or contravened the provisions but continued in the composition scheme, they will be giving a notice, and that notice will be in CMP5. Within 15 days of that notice, we need to give a reply in CMP6, and thereafter within 30 days they will pass an order either allowing us to continue in the composition scheme or denying the composition scheme. Then statement in ITC 1 within 30 days of intimation or application or order. This is like the moment you come out of the composition scheme and go into normal scheme, during the period when you are under composition scheme, you have not taken ITC on your closing stock, but that closing stock will be used during the normal scheme. So before the date of migration from normal scheme, that composition scheme to normal scheme, whatever is the closing stock, on that you can take ITC, for which you need to file one ITC form, ITC 1 within 30 days from the date of migration from composition scheme to normal scheme. So these are the various forms. CMP2, entry into composition scheme before commencement of the relevant financial year. ITC 3, whenever you enter into composition scheme, you need to reverse the ITC on closing stock. So 60 days from the commencement of the relevant financial year. CMP4 for exit from the composition scheme. Whenever you want to, you can exit, but when you breach the condition within 7 days, you need to exit. And ITC 1, whenever you exit from the composition scheme and go into normal scheme, you can avail the ITC on closing stock. So ITC 1 within 30 days of conversion. CMP5 show cause notice. CMP6 reply to notice within 15 days. CMP7 order within 30 days of receipt of reply. And CMP8 is the return, quarterly return by 18th of the month following the end of the quarter. Now, whenever officer passes an order for denying the composition scheme, whether that denial will be prospective or retrospective, either it can be prospective, the date from which they have passed the order, or it can be retrospective, back date, but it should not be before the date you committed the breach. So in case of denial of option to pay tax under composition scheme by tax authorities, the effective date of such denial from a date including any retrospective date as may be determined by tax authorities. However, such effective date shall not be prior to the date of contravention of the provisions. When is it advisable to opt for composition scheme? That is, already I told you, who is exclusively engaged in supply of service other than supply of food, or who is engaged in supply of services along with supply of goods, but where they want to provide service beyond 10% limit, then they can come into composition scheme 10(2)(a). So these are the points related to composition scheme. And we discuss this because this charge is there, na? This chapter, charge under CGST. This charge under CGST has both questions on RCM as well as composition scheme. That's why. Now look into this. Question number 1. State the person liable to pay GST in the following independent cases, provided recipient is located in the taxable territory. Services provided by an arbitral tribunal to any business entity. Arbitral tribunal to business entity. Arbitral tribunal means arbitrator. Don't apply tribunal, not that tribunal. Fees collected by court or tribunal is there, no? Not that. Arbitrator to business entity. Is it covered under RCM? Tell me. Yes. Good. So RCM will be applicable in this case. Then sponsorship services provided by a company to an individual. FCM or RCM? Sponsorship services provided by company to an individual. FCM, it's not RCM, because in case of sponsorship services, the recipient should be body corporate or firm. If the recipient is other than body corporate or firm, it will not be coming under RCM, it will be FCM. The recipient should be body corporate or firm. Then renting of immobile property service provided by central government to a registered business entity. FCM or RCM? It is RCM. Very good. Suppose if it is to unregistered business entity, then it will be coming under FCM. Then next, number 2, Vivek Goyal, an independent director appointed in accordance with the provisions of Companies Act 2013 of A to Z Private Limited, has received sitting fee amounting to 1 lakh from A to Z Private Limited for attending the board meetings. Who is the person liable to pay tax in this case? Whether director will pay or company will pay under RCM. FCM or RCM? RCM. Good. So because services provided by director of a company to company or body corporate is covered under RCM, so in this case it will be RCM. Then number 3, Raghu Associates provides sponsorship services to We Win Cricket Academy LLP. Determine the person liable to pay GST in this case. Is it FCM or RCM? RCM. Very good. Because in case of sponsorship service, we need to see the recipient. Recipient is body corporate or firm. And in GST, where the LLP will come? Under body corporate or firm? Firm. Firm includes LLP. So LLP don't bring under body corporate. LLP will come under firm only. Okay. Then legal fees is received by Shushrut, an advocate from Messrs. Tattva Trading Company, engaged in making taxable supplies and located in Maharashtra, having turnover of 50 lakhs in preceding financial year. Who is the person liable to pay tax in this case? So come on, tell me whether it is FCM or RCM. Advocate services to business entity will be RCM. See, advocate services will be either exempted or advocate services will be covered under RCM. Okay. So here in this case, advocate services is RCM because the turnover of the business entity during the previous year does not exceed threshold limit or exceeded threshold limit. Exceeded threshold limit. Due to that reason, it will come under RCM. Then number 5. State the person liable to pay GST in the following independent cases, provided recipient is located in the taxable territory. Services supplied by an insurance agent to insurance company. So insurance agent to insurance company, is it covered under RCM? Yes, good. Because agent services, in 5 agent services we saw insurance agent to insurance company is covered under RCM. Service supplied by recovery agent to car dealer, FCM or RCM? Service supplied by recovery agent to car dealer, FCM. Why FCM? Because in case of recovery agent services, the recipient should be, bank. Then only it is RCM. But suppose if the recipient is not bank, it will not be coming under RCM. Then next, security services. Services by way of supply of security personnel provided by a partnership firm to a registered person paying tax under regular scheme. FCM or RCM? FCM or RCM? Very good, RCM. Because for security agency services, supplier should be other than body corporate. Yes, supplier is other than body corporate. And the recipient should be registered. Yes, recipient is registered but not opting for composition scheme. So due to that reason, it will be RCM. Then look into this question number 6. Sultan and Sons, a partnership firm based in Nagpur, Maharashtra, is a wholesaler of taxable product P and product Q, exempt by way of notification only within the state of Maharashtra. So they're dealing with two products, product P and product Q. Product P is taxable and product Q is exempted, and where only in the state of Maharashtra. Its aggregate turnover in the preceding financial year is 130 lakhs. So can they opt for composition scheme? Yes, because previous year aggregate turnover does not exceed 150 lakhs. Because where are they located? Maharashtra. For Maharashtra, the applicable limit will be 150 lakhs. So they can opt for composition scheme. The firm wishes to opt for composition scheme. However, its accountant is of the view that person engaged in making exempted supplies is not eligible for the said scheme. Discuss. What is your answer? Is this statement valid or invalid? Accountant statement that person making exempted supplies not eligible for the scheme is valid or invalid? Invalid. Because only a person who is making non-taxable supplies cannot opt for composition scheme. But a person who is making exempted supplies can definitely opt for composition scheme. There is no restriction. Then next. So how you need to present this answer? You need to write as per section 10, subsection 1 of CGST Act. A person whose aggregate turnover during the previous year does not exceed 150 lakhs or 1.5 crores can opt for composition scheme during the current year. In the present case, Sultan and Sons aggregate turnover during the previous year is 130 lakhs, which does not exceed 150 lakhs. So can opt for composition scheme during the current year. Also, a person who is making supply of non-taxable supplies is not eligible for composition scheme. However, a person making exempted supplies can opt for composition scheme. Next. A person availing composition scheme under subsection 1 and 2 of section 10 in Haryana during a financial year crosses the turnover of 1.5 crore in the month of December. Will he be allowed to pay tax under composition scheme for the remainder of the year? That is till 31st March. Please advise. So whenever their aggregate turnover in a year exceeds 1.5 crore in the month of December, so immediately they need to exit from the composition scheme. So turnover is 1.5 crores in composition scheme. The moment your turnover crosses 1.5 crores, you need to come into normal scheme. So for the remainder of the year, they cannot continue in composition scheme. It will be regular scheme. Then 8, determine whether the suppliers in the following cases are eligible for composition levy under section 10(1) and 10(2), provided their turnover in the preceding year does not exceed 1.5 crores. Their turnover in the preceding year does not exceed 1.5 crores. Mohan Enterprises is engaged only in trading of pan masala in Rajasthan and registered in the same state. Tell me whether Mohan Enterprises can opt or cannot opt for composition scheme. Can or cannot opt? Cannot opt for composition scheme because they are eligible. Trading. Only manufacturer of notified goods cannot opt for composition scheme. But trader of notified goods can opt for composition scheme. Got it? Trader can opt. Number 2, Sugam manufacturers have registered office in Punjab and Haryana and sells the goods manufactured by it in neighboring states, can they opt for composition scheme? No, because a person who is making interstate supplies cannot opt for composition scheme. Then next, number 9, Subramanian Enterprises has 2 registered places of business in Delhi. Its aggregate turnover in the preceding financial year for both the places of business is 120 lakhs. It wishes to pay tax under composition levy under section 10(1) and 10(2) for one of the place of business for the current financial year, while continuing to pay tax under normal levy for other. You are required to advise Subramanian Enterprises whether he can do so. See, remember, when you have multiple registrations, with respect to all registrations, you should be under composition scheme, or all registrations you should be under normal scheme. Few registrations composition scheme and few registrations normal scheme is not possible. Okay, either be in composition scheme for all registrations or be in normal scheme for all registrations, but this mix and match is not allowed. Then number 10, Mr. Ajay has a repair center. Repair center means services registered under GST where electronic goods are repaired or serviced. His repair center located in the state of Rajasthan, and he is not engaged in making any interstate supply of services. His aggregate turnover in the preceding financial year is 45 lakhs. So is it 10(1) or 10(2)A? 10(2)A. Services na? So 10(2)A. And what is the limit for 10(2)A? 50 lakhs. So during the previous year, turnover does not exceed 50 lakhs. So current year they can opt for composition scheme, no doubt about that. With reference to the provisions of CGST Act, examine whether Mr. Ajay can opt for composition scheme under 10(1) and 10(2)A, 10(2) for the current financial year. 10(1), 10(2) not possible. 10(1), 10(2) not possible because a person who is engaged in supply of services other than supply of food cannot opt for composition scheme under 10(1). Whether he is eligible to avail the benefit of composition scheme under 10(2)A? Yes, 10(2)A is possible. Considering the option of payment of tax available to Mr. Ajay, compute the amount of total tax payable by him in the current financial year, assuming his aggregate turnover in the current financial year is 35 lakhs. The current financial year turnover is 35 lakhs. What is the rate applicable under 10(2)A? 6%. 3% CGST, 3% SGST. So 35 lakhs into 3% CGST, 35 lakhs into 3% SGST, that will be taken as the tax payable. Will your answer be different if Mr. Ajay procures few items required for providing repair service from neighboring state of Madhya Pradesh? See, a person should not make interstate supplies, but can they have interstate purchases? Yes, they can have interstate purchases, so they can be into composition scheme. Here they are purchasing, they can have interstate purchases, no restriction, but they should not have interstate sales. Okay, then next 11, Messrs. United Electronics, a registered dealer, is supplying all types of electronic appliances in the state of Karnataka. So within the state, trader. Its aggregate turnover in the preceding financial year by way of supply of appliances is 120 lakhs. The firm also expects to provide repair and maintenance service of such appliances from the current financial year. With reference to provisions of CGST Act, examine whether the firm can opt for composition scheme for the current financial year, as the turnover may include both supply of goods and services. Can they opt for composition scheme or cannot opt for composition scheme? Can opt or cannot opt? Can opt. Good. Can opt for composition scheme because during the previous year in Karnataka, the turnover limit is 150 lakhs. As their turnover does not exceed 150 lakhs, current year definitely they can opt for composition scheme. And they are providing services, let it be. But to what extent they can provide the services? They can provide service up to 10% of turnover during the previous year or 5 lakhs, whichever is higher. To that extent, they can provide the services. That is the extent up to which services can be supplied. Okay. So these are the answers. Then next, we will see value of supply, So there is one illustration here. Have a look into this illustration. Black and White Private Limited has provided the following particulars relating to goods sold by it to Colorful Private Limited. List price of the goods exclusive of taxes and discounts is 50,000. Tax levied by municipal authority on sale of such goods 5,000. What is the meaning of this term exclusive? Exclusive means before. Exclusive does not mean excluding. Exclusive means before. Okay. So 50 before taxes and discounts is 50,000. Tax levied by municipal authority on sale of such goods is 5,000. Packing charges not included in the price above is 1,000. Black and White Private Limited received 2,000 as price linked to subsidy from NGO on sale of such goods. The price of 50,000 of the goods is after considering such subsidy. Black and White Limited offers 2% discount on its list price, which is recorded in the invoice of the goods. Determine the value of taxable supply made by Black and White Private Limited. So first, transaction value we need to take. What is the transaction value here? 50,000 is the transaction value. Now tell me, what is the treatment for this 5,000? Add or less? Add or less? What is the treatment of this 5,000? Should we add or less? Add. Why? First, as per section 15, subsection 2, clause A, taxes, duties and cess by whatever name called other than GST should be included in the value. In the present case, this 5,000 is to be included as per provision. But in the given price, it is before taxes, not included. So we need to add. Okay, good. Then next, packing charges. What is your answer? Add or less? Packing charges, add or less? Add. So why packing charges we need to add? Again, as per 15(2)(c), incidental expenses or any other expenses incurred by the supplier and charged to recipient before at the time of delivery of goods should be included in the value. So this should be included in the value, but in the given price, it is not included. Therefore, we need to add. Okay. So 1,000 rupees we need to add. Next, Black and White Private Limited received 2,000 as price linked subsidy from a NGO on sale of such goods. What is the treatment of this 2,000? Add or less? And it is given that 50,000 is after considering the subsidy. Add or less or ignore? Add or less or ignore? Add. We should add. Why? Subsidy from an NGO is to be included. Subsidy from an NGO is to be included. But in the given price of 50,000, they would have reduced. Means X is the original price. From that X, they reduced 2,000. That's where they arrived at 50,000. That is the meaning of this 50,000 after considering such subsidy. Means there is some X is the price, 2,000 subsidy reduced and 50,000 we got. But whether this 2,000 is to be included or to be excluded, to be included. But in the given price, it is excluded. So we need to add. Next, Black and White Limited offers 2% discount on list price. What is the list price? 50,000. 50,000 into 2%. What is 50,000 into 2%? 1,000. 50,000 into 2% is 1,000. 2% discount on the list price of the goods, which is recorded in the invoice for the goods. It is to be included or to be excluded. That is, I mean, add or less this 1,000. Less. Why? Because it's a pre-supply discount. As it is a pre-supply discount, it is allowed as a deduction. Got it? It is allowed as a deduction. And it is moreover before discount. The price is before discount. So we need to reduce. So if you see the value in this case, 50 plus 5, 55 plus 1,000, 56 plus 2, 58 minus 1,000, 57,000 will be taken as the value. Okay. And we need to give proper explanation. First, we need to write the section. At least remember 15(2). as per section 15 subsection 2. For example, first point, if you are writing taxes, duties and cess by whatever name called other than GST should be included in the value. In the given price, it is not included, therefore should be added. Like that, you need to present the answer. So for writing these explanations only, you will be given full marks. Suppose if it is a 5 marks question, wherein if you are writing only the answer, maybe you get 2 marks or 3 marks for writing the answer. But for writing the explanation only, you can expect full marks. Okay. Then looking into this illustration 2, Samriddhi advertisers conceptualized and designed the advertising campaign for a new product launched by New Moon Private Limited for a consideration of rupees 5 lakhs. Samriddhi advertisers owed 20,000 to one of its vendors in relation to advertising service provided by it to New Moon Private Limited. Such liability of Samriddhi advertisers was discharged by New Moon Private Limited. New Moon Private Limited delayed the payment of consideration and thus paid 15,000 as interest. First, we will take 5 lakhs as the transaction value. Then, what about this 20,000? Add or less? This 20,000 is add or less? We need to add. Why? As per section 15, subsection 2, clause B, any amount that the supplier is liable to pay, but which is incurred by the recipient. Actually, the 20,000 who should pay? That 20,000 should be paid by the supplier. But who paid it? Recipient has paid it. Therefore, it should be included in the value. Okay. Any amount that the supplier is liable to pay, but which is incurred by the recipient, should be included in the value. So due to that reason, it should be added. Okay. And in the given price, it is not added. So we need to add that. So 5 lakhs plus 20,000. Then what about this 15,000 to be included or to be excluded? That is to be add or less? 15,000 is add or less? Add. Interest as per section 15 2D. Interest or late fee or penalty for delay in receipt of consideration should be included in the value. In the given price, it is not included. So we need to add. So 5 lakh plus 20,000 plus 15,000. So that should be taken as 5 lakh 35,000. But there is one usual assumption that we will take. That is 15,000 rupees is assumed to be inclusive of GST in the absence of information. Usually, interest is assumed to be inclusive of GST. Here, the rate is given as 18%. So, what we need to do? 15,000 into 100 by 118 will be taken because it's assumed to be. Generally, if nothing is given, interest is assumed to be inclusive of GST. Okay. Because beyond interest, we are not going to collect anything. So 15,000 into 100 by 118. How much? 15,000 into 100 by 118. So 13 to 12,712 will be taken. So that should be taken as the value of taxable supply. Is it clear? And it is also possible to assume interest to be exclusive of GST. In that case, the value of supply will be 5,35,000. But in exam, in order to have the same answer of suggested answer, ensure that in the absence of information in the question, assume this interest as inclusive of GST. Okay. Suppose clearly it is given as interest exclusive of GST, you will take it as exclusive of GST only. But nothing is given, assume as inclusive of GST. Then next one. Say this. Whether post-supply discount is eligible for deduction from the value of supply in all situations. Explain. Post-supply discount is allowed as deduction when? If two conditions are satisfied. Supplier should have agreed the terms before or at the time of supply, and the recipient should reverse the ITC. Then only post-supply discount is allowed as deduction. Okay. Term should be agreed before the time of supply, and the recipient should reverse the ITC. These two. Then second one, consideration under GST law includes both monetary and non-monetary consideration. True. Consideration can be monetary or it can be non-monetary. When the consideration is non-monetary, we need to ascertain what is the monetary value and that should be taken. Then see this third question. Sharp Minds Institute provides coaching for engineering entrance examination. The monthly fee charged by the institute from a student is 10,000. The institute is known for its commitment to provide education to underprivileged children. It trains 10 students every year for entrance examination free of cost. The institute has received 3 lakhs as coaching fees during a month. Navjeevan, an NGO working in the area of education for underprivileged children, has given a subsidy of 10,000 during the month to the institute as it is serving the cause of underprivileged children. Determine the value of supply of education services. Basically, here, if you see this subsidy, is this subsidy directly linked to the price or not directly linked to the price? Is this subsidy directly linked to price or not directly linked to the price? What is your answer? So not directly linked to the price. Why not directly into the price? Clearly it is given as in lump sum. As it is given as in lump sum, so it will not be directly linked to the price. So therefore it will not be included in the value. Okay. It should be ignored. Ignore it. As it is not directly linked to the price, ignore it. Just take 3 lakhs as the value of supply. Then next. Number 4. Furniture Wala is a chain of retail showrooms selling both modern and classic furniture. In order to build strong customer association, the showroom provides free delivery of furniture at the premise of the customers. If the distance between the showroom and the customer's premise is up to 20 kilometers, where the distance is more than 20 kilometers, the showroom charges a concessional freight of 10 rupees for every additional kilometer. Miss Leena Kapoor purchased a double bed, a dressing table and a center table for 2 lakhs from Furniture Wala. Leena gets free delivery of the furniture at her residence. The showroom incurs an expenditure of 1,000 for delivering the furniture. Now, whether 2 lakh 1,000 should be taken as value or 2 lakh should be taken as value? Whether 2 lakh 1,000 or 2 lakhs, what should be taken as a value? 2 lakh 1,000 is wrong answer. Only 2 lakh should be taken. Why, sir? Even though they are incurring an expenditure of 1,000 rupees, are they charging it? No, they are not charging it. Only when expenditure is charged to recipient, it should be included in value. Basically here, they are not going to charge anything if it is up to 20 kilometers because they are giving a free delivery up to 20 kilometers. As they are not charging it, it will not be included in value. So 2 lakhs only should be taken. Then next. Will your answer change if the residence of Miss Leena is 50 kilometers away from the showroom? Then what should be taken as a value? 2 lakhs plus 1,000? No, not 2 lakhs plus 1,000. Even though they incur 1,000, how much are they going to charge? 10 rupees for every additional kilometer. So what is the additional kilometers? 30 kilometers into 10, that is 300. So 2 lakh 300 will be taken as the answer. Okay. That should be taken as the answer in this case. Then number 5. AKJ Foods Private Limited gets an order for supply of processed food from a customer. The customer wanted the consignment tested for gluten and specified chemical residues. AKJ Foods Private Limited does the testing before the supply and charges a testing fee for the same from the customer. AKJ Foods Private Limited argues that such testing fee should not form part of consideration. No, this testing fee, which is incurred by the supplier and charged to recipient before at the time of delivery of goods, because the customer wanted this testing to be done. So definitely it should be included in the value. As per 15 subsection 2 clause C, any expenditure incurred by the supplier and charged to recipient before or at the time of delivery of goods or supply of services should be included in the value. Consequently, this testing fees incurred by the supplier and charged to recipient before delivery should be added. Next. Number 6, Mazda Banners, an advertising firm, gives its customer an interest-free credit period of 30 days for payment. So 30 days is the credit period. Its customer ABC paid for the supply 32 days after the supply of service. 32 days after the supply of service, Mazda Banners waived the interest payable for a delay of 2 days. For a delay of 2 days, they have waived the interest. Will this be included in the value? See, interest, late fee or penalty, only when it is actually collected should be included in the value. But when it is waived off, first of all, they are not incurring, like they are not recovering the interest. So why it should be included in value? It is not required to be included in value. Then number 7, Crunch Bakery Products Limited sells biscuits and cakes through its dealers, to whom it charges the list price minus standard discount and pays GST accordingly. When the goods remain unsold with the dealers, it offered additional discount on the stock as an incentive to push the sales without any prior agreement between them for offering such additional discount. So now there are 2 discounts here. One is normal discount, another is additional discount. What is your answer? Whether both the discount is allowed as deduction or only normal discount is allowed as deduction? What is your answer? Whether both will be allowed as deduction or only normal discount is allowed as deduction? Only normal discount. First they gave a standard discount. That standard discount is a pre-supply discount. As it is a pre-supply discount, it is allowed as deduction. Whereas post-supply discount is there. That post-supply discount is allowed as deduction provided the terms are agreed before or at the time of supply. If the terms are not agreed before at the time of supply, it will not be allowed as deduction. Okay. So in this case, the terms are not agreed without any prior agreement between them. That's why it is not allowed as deduction. Then number 8, Red Pepper Limited, Delhi, a registered supplier, manufactures taxable goods. It provides the following details of taxable interstate supply made by it during the month of March. List price of the taxable goods supplied interstate exclusive of taxes 15 lakhs. So we will take this as transaction value. Price linked subsidy received from central government for supply of taxable goods to government school exclusively related to supply of goods included at serial number 1. And below you can see, so the list price is net of 2 subsidies, net of subsidies. Okay. Now tell me whether this 2,10,000 we need to add or we need to less or we need to ignore. Add or less or ignore? Ignore. Why? As per section 15 subsection 2 clause E, subsidy from central government or state government directly linked to price should be excluded. In the given price, it is already excluded because it is net of subsidies. So therefore, we need to ignore, not consider. Next. Price linked subsidy received from an NGO for supply of taxable goods to an old age home exclusively related to supply of goods included at serial number 1. Now, what is the treatment for this 50,000? Add or less or ignore? Add. Why we need to add? This subsidy is from other than CG or SG and it is directly linked to the price. So it is to be included. But in the given price, net of subsidy means they have reduced. So we need to add. Okay. Next, tax levied by municipal authority. As per section 15, subsection 2, clause A, this should be included. But in the given price, is it already included or not? No. So because you can see below, However, the other charges, taxes, fee are charged to the customer over and above the list price. Means this is an additional. So we need to add. Same way as per 15(2)(c), packing charges. So collected from the customer, we need to include in the given price, not included. So we need to add. Then sixth one, late fee paid by the recipient of supply for delayed payment of consideration. Recipient has agreed to pay 6,000 in lump sum and no additional amount is payable by him over and above. Means the 6,000 is assumed to be inclusive of GST into 100 divided by 118. Don't add 16,000 directly. See this wording. Recipient has agreed to pay 6,000 in lump sum and no additional amount is payable means the 6,000 is inclusive of GST. Accordingly, 100 by 118 we need to add as per 15(2)(d), interest, late fee, penalty. Okay. Then question number 9. Measures FlowPro, a registered supplier, sold a machine to BP Limited. It provides the following information in this regard. Price of the machine, excluding taxes and other charges mentioned at serial number 2 and 3. So 25,000 is taken as transaction value. Third party inspection charges. Such charges were payable by FlowPro, but the same have been directly paid by BP Limited to the inspection agency. These charges were not recorded in the invoice issued by FlowPro. Tell me what we need to do, whether we need to add or deduct or ignore. We need to add. As per section 15(2)(b). Why 15(2)(b)? It is a liability of FlowPro which is incurred by recipient. Therefore, it should be included in the value. Okay. Liability of supplier incurred by recipient due to that reason. Then freight charges for delivery of the machine. FlowPro has agreed to deliver the goods at BP Limited's premises. Is it allowed as deduction? That is, freight charges we need to add. Why we need to add? 15(2)(c). 15(2)(c). Any expenditure incurred by supplier and charged to recipient before at the time of delivery of goods. So we need to add this 2,000. Then subsidy received from state government on sale of machine under skill development program. Subsidy is directly linked to the price. Now, whether the given price is net of subsidy, yes, that is given. So what we need to do with respect to this 5,000, add or less or ignore? Ignore. We need to ignore this because as per section 15, subsection 2, clause E, the subsidy is to be excluded and in the given price it is already excluded. So therefore, we need to ignore it. Then discount of 2% is offered to BP Limited on the price mentioned at serial number 1 above and recorded in the invoice. Is this discount of 2% allowed as deduction? Yes, because it's a pre-supply discount. So what is the list price? 25,000. So 25,000 into 2% is deducted. Okay. Now you will get the value of taxable supply based on this. Then next, look into question number 10. Shri Krishna Private Limited, a registered supplier, furnishes the following information relating to goods sold by it to Shri Balram Private Limited. Price of the goods, excluding taxes and other charges mentioned in 356. First, 1 lakh is the transaction value. Municipal tax, add or less or ignore? Municipal tax, add or less or ignore? Add. Why? As per section 15(2)(a), taxes, duties and cess by whatever name called other than GST to be included. In the given price, it is not included. So we need to add. Then inspection charges. Inspection charges we need to add or deduct or ignore? Add. Because it will come under 15(2)(c), expenditure incurred by supplier and charged to recipient before at the time of delivery, and the given price it is not included, so we need to add. Subsidy received from Shri Ram Trust. Subsidy is directly linked to the price. and the price is net of subsidy. Now tell me what we should do. Add or less or ignore? Add. So we need to add section 15 subsection 2 clause E. We need to include it because it is from other than CG or SG, and in the given price it is excluded, so we need to add. Late fee for delayed payment inclusive of GST. Sri Balram Private Limited paid the late fees. However, these were ultimately waived by Sri Krishna Private Limited and the amount was refunded to Sri Balram Private Limited during the said month. Add or less or ignore? Add or less or ignore? Ignore. Ignore. It is waived. It is waived. Ultimately, amount was refunded the same month, na? Then they are not recovering. So that's why we need to ignore. Next, weighment charges. Such charges were paid by Balram Private Limited to Radhe Private Limited on behalf of Krishna Private Limited. Actually, it is supplier liability which is incurred by the recipient. Should it be included? Yes. As per 15(2)(b), it is to be included, but in the given price it is not included. So we need to add. Okay. Then this 11th question, this is the last question. Kohli Limited, a registered supplier, has supplied machinery to Geisha Limited, a supplier registered in the same state. It provides following particulars regarding the same. Price of machinery exclusive of taxes and discounts 5,50,000. So what is your answer? It is to be included or to be excluded, this 5,50,000? That is the transaction value. Next, part fitted in the machinery at the premises of Geisha Limited. Amount has been paid by Geisha Limited directly to the supplier. However, it was Kohli Limited liability to pay the said amount. The said amount has not been recorded in the invoice issued by Kohli Limited. So we need to add. Why? So 15(2)(b). 15(2)(b), any amount that the supplier is liable to pay, but which is incurred by the recipient, should be included in the value. In the given price, it is not included. So we need to add that. Then installation and testing charges for the machinery not included in the price. We need to add. Why? 15(2)(c), taxes, 15(2)(c), any charges, any expenditure incurred by supplier and charged to recipient before at the time of delivery of goods to be included. In the given price, it is not included. So we need to add. Discount at 2% on the price of the machinery mentioned in serial number 1 above, recorded in the invoice. So this discount is allowed as reduction. So 5,50,000 into 2%, that is 11,000. So it is allowed as deduction. 5,50,000 into 2%. So 15 subsection 3. Kohli Limited provides additional discount at 1% at year end based on additional purchase of other machinery for which adjustment is made at the end of the financial year without any change in individual transaction. It is not allowed as deduction because it's an additional discount. The terms are not agreed before at the time of supply. So it is not allowed as deduction. Okay. So these are the questions that we have mostly in these lines. So we completed this also. And as I already discussed, friends, like today I'm just stopping it because of the throat issue. I'm unable to take. And today, tomorrow, what I'm going to do is that, so when I interacted with all of them, they said to discuss RTP questions. So what I will do tomorrow, I will discuss May 24 RTP, September 24 RTP, Jan 25 RTP. These 3 RTPs I will discuss tomorrow. Okay. As you want me to do the revision, etc. So we will do that. So that is the agenda for tomorrow. So tomorrow we will discuss that. Okay. And even input tax credit also quickly I will discuss once. And then we will see the discussion related to RTPs. Done. Thank you.